But now what will they actually do? Let's wait and see that. I'm going to actually start from this side and start with Nilesh. Nilesh was watching the budget with us, and all of the reactions when that STT came in. That was maybe something that the market's not going to like.
Yeah, absolutely. That's going to impact the sentiment for the near term for sure. I think there'll be concerns if that will lead to any drop in volumes as well, because liquidity is extremely important for the markets as well. So I think clearly that will surely impact the near-term sentiment in the market. But obviously there are many other positives to do with infrastructure, the focus on textiles, focus on semiconductors, rare earth minerals. So I'd probably say that in the short term it will impact market sentiment, but lots of things in store for the medium to long term.
Okay, the one big positive from your end, Nilesh?
I think clearly the focus on infrastructure, the fact that the spending on infrastructure is being taken up to 12.2 lakh crore, the talk of more high-speed rail corridors, the focus on waterways, I think these are some of the big positives out there. So to me, I think the biggest positive here is the continued focus on infrastructure. Okay,
are we finding more positives than negatives, Manish, or is it a sea of status quo and then this one thing on STT which is telling you that the government wants to really dissuade people from engaging in futures trade?
So bad for equity, bad for bond markets, sovereign bonds. The expected borrowing was somewhat less than what it turned out to be. Hopefully there is a swap which would be there in the fine print. If it's not there, then bonds will blow up by 10-15 basis points further on tomorrow. Good news for credit markets, that the trade receivables are now considered as ABS. Total return swap will be now allowed, and which perhaps would enrich the sort of deepening of the credit markets could really happen. So lots of nuts and bolts things. As we discussed in the morning, that no big bang. I don't think the government has to please equity markets right now. In fact, that they've done reasonably well. This is kind of a small little things here and there. As we said, they're letting the paint dry.
That's a non-equity market person talking, I can tell you that. Okay, just by the way, PSU banks have tumbled as well because the expectation was that there'll be an increase in some maybe FI limit or value unlocking. That hasn't happened, and you're seeing that correcting come in the PSU banks as well. But Manish raised a point, and which I want to come to both Mihir and Pankaj with, that there is some stuff done for the bond markets, not as much for the equity markets. You were very vocal, Pankaj, about the bond thing. Manish raised this point as well. If the fine print doesn't have that swap that Manish was talking about, what do you make of the borrowing number, which is fairly high?
No, I still think the net borrowings are very much, in place kind of a thing. So I'll not be ruffled by 50,000 crore here and there. We need to understand, you need to give some leeway or flexibility to a finance minister who's running this country. You cannot pigeonhole her to a number to the second decimal. So I think broadly the numbers are very much in place.
But the expectation was 16 lakh. The gross is 17.2. So it's not actually 20-30,000 crores. It's much higher. Yeah,
but given the context, meaning I think as long as she has maintained the fiscal deficit, that's fine. How she finances is a matter of overall aggregate funding or cash flow, but your overall aggregate deficit number is pretty much in shape. So, and given the fact that she is having an overflow of small savings, the market borrowing number has not changed significantly.
Okay, so how that math has actually been arrived at, I think will remain to be seen, because you have that increase in gross borrowings, but the fiscal deficit target is good. One big positive and one, okay, you don't want to say big negative, Mihir, but at least one not so positive.
The STT increase was obviously a bit of a irritant, I would say. Given the little bit of fragile sentiment in the market, that was maybe avoidable. I don't know what the tax collection will be by increasing the STT number, but
seems
definitely
more like a preventive rather than a more attempt to put a lid on that kind of trade rather than get some great revenue.
You want to do that when the markets are in a positive sentiment, in a positive mood. You don't want to do it when the markets are already fragile. We've seen the currency weakness. We've seen FIs continue to sell. In that, a little bit of sentiment plus minus can impact, in the short term. But I'd say that overall, if you look at the capex focus that continues, we need to see how much the defense number is in terms of capex, defense, railways, the sub-segments. Those details have to be worked out. But broadly, I'd say it's not much of an impact for the markets.
I just want to add on to that whole thing. India is the market now which has the highest ratio of derivatives trading versus cash market. Okay. There is SEBI document out there which says 97% of retail traders lose money. So to disincentivize or reduce the speculative element in the market, I don't think so. I think it's a very reasonable disincentive because we need more investors than traders in this country.
No, but then why why not LTCG? Then if you need more investments. Okay, Shanti ma'am, very quickly.
So I think we did not expect too much from the budget, and it is exactly that. There is very little to see. I think the only big positive is the commitment to fiscal prudence and the fact that, of course, the devil is in the details and the small print. But if they stick to 4.37, which is marginally lower than this year, which is what we said, I think that's good. Within that, the emphasis on capex is good. It's marginally higher. It's about 1 lakh higher, and the borrowings are also 1 lakh higher, so we will correlate to that. But I think the fact that they did not bring out LTCG was still okay, but the blow on STT, I think markets were already down. And it's just a sentiment negative from a trading and a volume perspective, albeit this thing. So I think the finance minister did not have too much room and did not have too much room. I was surprised by no additional allocation to defense. I was surprised by nothing on LTCG. Of course, there's a tax holiday on export of cloud services from local data centers, which is good. There was a lot of talk on parity on deposits versus mutual fund, given the challenge to the banking system on the saver to the investor move, and was expected to have not the full way parity, but some parity. No parity on that account. So I think the only positive is the fiscal deficit prudence.
So Nilesh, coming on this now, what do the markets look forward to, right? I mean, Tamanna mentioned this, right? In some sense, no big negatives, yes, except for STT, but a lot of things haven't been said. Nothing on disinvestment, nothing on defense, which came about, which was very much anticipated, plus this STT. What does the market look forward to now?
No, I think it's going to be now business as usual. You go back to fundamentals, you go back to earnings, how individual companies will shape up, and then of course valuation. So I think it's going to be pretty much a business as usual mode from, say, maybe tomorrow onwards, that you will have to now look at individual companies, how they are doing, earnings, valuations. I think you go back to basics. That's about it. There's really nothing, no new big theme emerging out of this, which you want you to kind of say, okay, reallocate. I think the big comfort which the markets get is again on the infrastructure side. There was murmur that maybe the spending on infrastructure will not kind of go up, but that's really the big saving grace, that the spending on infrastructure continues. The second thing is essentially that risk management fund. I think there was some talk of a 25,000 crore fund for infrastructure. On a 12 lakh crore spending, 25,000 crores is 2%. That's kind of a lot. I think that's going to give a lot of comfort, a lot of solace to banks and lenders to go ahead and lend to infrastructure projects, and the multiplier effect on that. So that to me is honestly the biggest positive of this budget.
Okay, so a lot of positives long term, one hit short term, but looking at what the markets are doing right now, I think we should go to our newsroom market pit with Sharad. He has Kush Bora and Parag Thakkar with him. Sharad, what's the mood? What's the sentiment?
Well, the sentiment is extremely negative, absolute carnage in the markets, and I think Parag Bhai is also a bit disappointed. The STT, it's a big bummer, right?
Actually, frankly speaking, I was on future and options, because I think
please.
The entire nation having a full time pass of having trading in futures and options on mobile, that is not good for India. So I think this was expected in my view. I was slightly disappointed with long-term capital gain tax not being reduced and nothing done to attract more FIIs meaningfully into our markets, so that there is a sustainable flow of dollars into our market. That was my expectation, which has not been fulfilled. But I would say that fiscally prudent budget and infrastructure capex already from 11.2 lakh raised to 12.2 lakh crore is a positive.
Right, that's the view coming in from Parag Bhai. But Kush, a little bit of panic in the trading community?
More than a little bit, but my suggestion, don't panic, don't act. There are already about 300 from the low point of the day. This was perhaps not what the market.
Got a small audio glitch there, and we'll just reconnect with Kush, but effectively don't panic. I believe Mr. Amitabh Chaudhary is with us. I'll wait for the confirmation there, but very quickly, like such a sharp fall, does this bake in the negatives of the budget from a market's perspective, Mihir?
Yeah, I think so. We've like 2% is a decent amount of correction, I would say, to account for the negative sentiment. Hopefully not much more to go.
Okay. Amitabh Chaudhary, Senior Vice President, ASSOCHAM, and of course runs Axis Bank, with us on the show. And as promised, we get you his first reaction after the budget. On balance, Amitabh, you think this is setting the stage for some of the things that were expected? Focus on a rare earth corridor, focus on states that have mining capabilities and some of those reserves, and of course, the extension of the scheme and bigger outlay for semiconductors.
Well, firstly, I was on a program earlier, and I think the budget is exactly along the lines of what we were speculating, that there'll not be, big, bold reforms there. That has already happened, and that's why there are a lot of details which have been provided, because, maybe there are not enough bold reforms are there. The market is slightly spooked because of the gross net borrowings being projected at where they are. Yes, STT seems to be another dampener, but as some of the commentators are rightly saying, that is back to business from tomorrow. People have expectations on a lot of concessions. Ultimately, if you want to keep fiscal prudence, if you want to, proceed in a certain way towards managing your maths, I think that's exactly what the finance minister has done. And I think the market will be able to get over it over a period of time. As I said in the program, that we're not expecting anything to come on the deposit side. And yes, obviously there is a setting up of a committee which will look at new reforms in banking. By the way, someone talked about the divestment target. There have been clearly, they are talking about 80,000 crore divestment number for this for the next financial year. So the number is there. I think the devil will be in the details. We might find some more numbers there, and hopefully we will find that the finance minister has actually looked at every sector and provided some kind of incentives. In the speech there were specific sectors which were mentioned. Semiconductor side, there we talked about the 10,000 crore fund to be able to lend to people and provide some kind of guarantee or a backstop. I'm sure we'll find some more schemes there where, again, you will push the agenda in the right direction, and that's exactly, I think, what this budget provides.
Okay. Mr. Chaudhary, it was me who had mentioned about this, so thank you for correcting me on that, on the disinvestment thing. This is Neeraj here. But just one quick mention, that the 12.2 lakh crore capex number. Now on the revised estimates, I think the growth could be somewhere between 18 to 20%, if I'm not wrong. Is that a number that you would have accepted before the budget speech start, or would you have hoped for some more detailing out there?
They'll always, they'll mange more, but end of the day, the maths has to add up, and so she has so many constituencies to satisfy, different parts of different communities, different regions, different sectors, and I think she has tried to do her best to ensure that the money is going wherever it is needed. So yes, the capex number looks good. At some stage, the private side also has to step up. And given some of the things which she has talked about, hopefully the private capex will start coming back, and that's what we're hoping for. Has not happened as yet, but hopefully, slowly, gradually, as the confidence returns, some of those numbers should start moving up.
Okay, from a corporate lens, Amitabh, they'll of course mange more, but what is the more that could have happened and hasn't? There's a lot of, for example, higher taxes on promoters buying back. Would that be seen as a negative sentiment?
Well, let's talk about a couple of things. One, firstly, there was this huge expectation built up to the budget that, okay, something will happen because the FPIs have been leaving India, and Indian stock market is not performing, so something will be done. One of the reasons why the stock market is reacting the way it is reacting is because maybe no clear signal is there in that respect. Similarly, as you were talking about, the topic which you raised, that we were expecting, oh, by the way, the promoters are going to be taxed at a higher rate. But end of the day, I think somewhere there was also a worry that actually this clause will come in and the rates will be even higher. So in a way, some promoters are breathing a sigh of relief that, okay, it's not as bad as they thought. So my view is, let this settle down, let people understand the maths in the budget and the maths exactly of how it will work. Some clarifications will come in the next 48 to 72 hours. And, the government knows what they're doing. Government understands what the reaction of what they're doing will be in the market, amongst the promoters, amongst the Indian consumers at large. I think they've done a pretty good job till now. Finance Minister has been presenting a budget for a long, long period of time, one of the longest serving finance ministers. So let's give due credit to the government and the people who are making the budget. And I'm sure as we go through the details, we will realize that things are not as bad. But anyway, we never expected something bold to come through. All the bold stuff has happened. And the government is not going to just look at budget to do it. They will continue to do it if the economy requires it. So in that sense, the fact that the budget has not led to something majorly negative, or there's no big announcement, we should not be too disappointed.
Okay, Mr. Chaudhary, on that note of optimism, thank you so much for speaking to us today on NDTV Profit. Really appreciate your time.
Thank you.
And see you soon. Okay, Pankaj Murarka, I'll come to you. one of the things, the government has accepted the key recommendations of the 16 Finance Commission in full. The vertical devolution retained at 41%. Some bit for infra. Is this enough? Was this good? Is there more needed?
No, I think government has done the right things, and on top of that, the central government is providing 1.47 lakh crores of assistance to us. So if you add to that aggregate, I think that's sufficient funds available to state governments to continue accelerating the infra projects. I think there is, meaning I would say this budget is short on rhetoric and long on details. There are a lot of finer details, so which effectively means the focus has been on unlocking, policy handicaps, or improving ease of business, providing policy impetus to drive growth. And I think it's clearly provided a lot of impetus for credit markets and bond markets. Meaning in terms of what it has done, talking about introducing total return swaps on corporate bond. India does not have a corporate bond market. There is no mechanism for lenders in India to pass on the credit risk or share the credit risk, which is the most important thing in all credit markets in the world. In the banking sector, and we don't have a functional bond market. So what you're doing with TRS in terms of unlocking or starting at least giving a fillip to the corporate bond market, the government will have to step in and do the underwriting. They will have to create the market. They will have to become the market maker before the market comes in. Providing 100 crores of incentive for muni bond markets globally and in US is of trillions of dollars.
Okay.
It doesn't exist here.
Mr. Bond, are you as optimistic on this?
No, I think TRS is a good news. Of course, details are awaited. RBI can tamper it very easily. CDS never flew, essentially because when you bought protection, you had to necessarily buy, 100% cash had to be allocated. There has to be some leverage built in there. So look, I own a Shriram Transport bond, and you as an individual, I'm a Citibank, and you as an individual want to buy it, you can just put $20 and then carry a risk of Shriram Transport 100%. If that is what effectively comes out with the support of RBI, big news. Okay, if it's going to be like $100 you have to give me to own a Shriram Transport, then you might as well keep Shriram Transport, right? Bond in your book. So these details are awaited. It's very likely that, like CDS also we got excited, but eventually it never took off. But I think they understand that bond market, as Pankaj said, needs support. I think it will be in the form that he and I think. That just a little bit of a leverage will be built in. See, equity, as I said, equity has done well. India has actually created a lot of pipes to get a lot of money into equity. What we need is a lot of pipes for private equity, for venture capital, for private debt, for corporate bond market. Those ought to be created now. And I think to a certain extent,
I could just make a comment. I think
of course.
My assessment of this budget is the finance minister is long on bond market and short on equities.
Short on equity. Okay, some details coming in. We were talking about the capital outlay for defense. It's at 2.2 lakh crore rupees versus 1.8 lakh crore rupees for FY26. That's a jump of 22%.
That's a good number.
So, like we said, now when we get some of the details, there will be clarity on what has been kept in the speech and kept out, because obviously even at 1.5 hours, there's still a lot more to say. I just want to pull up some of those defense stocks and see if there's any movement there at all or some recovery there at all. So there has been some extent of defense outlay. On the other hand, the GST revenue that they are pegging in also seems to have improved. So on balance, once that bruising, Nilesh, I'm going to come to you for this, so once that bruising of STT kind of, and not just on futures, on options also they have increased STT. Once that bruising sort of eases, do you think that there's enough for the equity markets right now to feel this was not half bad?
Yes, post this, whatever, the kind of bruise that we see today, I think post that it's going to be business as usual. I think after that we again go back to some of the global headwinds and things of that kind, and back to whether FPIs continue to sell or not. I think these are some of the things that we were probably focusing on maybe a day or 2 days earlier. I think we're back to that. And apart from that, of course, getting on to basically the micro fundamentals. I think that's something which will probably now start to prevail.
Okay, very interesting. By the way, data centers have gotten a small push. There aren't too many places to play that, but I did see an Anantraj zoom up in trade, so watch out for that. I don't know if the rare earth corridor creation really results in some meaningful gains for some of the rare earth plays, and some proposals to restructure power finance companies, and therefore maybe that bucket or that cohort could be an interesting one too. Mr. Ekambram, you were waiting for long-term capital gains, not on the FPI side, but otherwise, it's come in one space, not in general. Is that a disappointment or is that a start?
So it's like this. I think there was too much of a build-up of expectation because the FPIs had withdrawn from the market on long-term capital gains, and I think there was a lot of lobbying as well. But I think I had always said that it should be on long-term capital and not short-term.
Exactly, yeah. It's
so
come
the
for
tax
data centers,
holiday, the tax holiday on export of cloud services from Indian data centers, if they had expanded it to a number of key services, right, or even manufacturing exports from India or building India, it would have helped more from attracting long-term capital. But there is something small, and that's the way I see it. So, you know, as it was just said, Tamanna just said, the devil is in the details. Probably there has been an addition and a subtraction. Markets have taken it badly because STT, you know, the darling FNO is sort of hurt a little bit. It'll probably bounce back. But, you know, it's back to fundamentals. And there is a little bit for everything. If you look at it, something for employment, something for skilling, something for SME. The capex outlay has actually increased, right? So there is a lot of small things happening, but no big bang. And I think we went into it assuming no big bang, but there's a little bit for everybody. So.
By the way, there's a number there. The STT collections are tracking at about 50,000 crores in FY26 versus the budgeted number of 78,000 crores. Material shortfall, I don't know if it gets filled because of this hike in tax, but you know, that is something, I don't know if that engineered in any fashion, this hike. But I agree with you. I think it's not got to do with filling up the coffers as much as discouraging retail.
But I'll tell you, it's a timing. You have to get a vaccine, a flu shot every year. You never get it if you're already unwell. Because
who said?
That's the way I would put it. You already have thoda sa bukhar and all. Your doctor will say, come back for your flu shot later. Yes, you need it, but abhi nahi.
Short equities pe, long bonds pe.
Equities. That's the line, I think, of the day. For individual sectors, let's come to individual sectors now, because you're seeing some respond. You're seeing some textile stocks respond okay. You have your AI play, whatever, to whatever extent we have, a Netweb Tech, etc., Zenzar doing okay, and Amber Enterprise doing okay on some of those PLI, ECMS schemes. Is there more scope there, Pankaj, from where these stocks have already run up? Because you already have a directional push from government on this whole self-reliant theme.
Yeah, so the PLI outlay has been increased from 20,000 crore to 40,000 crore this year. So I think PLI is now part of core, and given the fact that we are at a stage where we face external headwinds, it's very important to double down on our domestic manufacturing and domestic demand. PLI just does that. Probably I would have expected, given a choice, of probably a more ambitious allocation, because we really need to drive it on a... we are at a stage where we need to not take incremental steps, but on some of those, some big ideas. We need to pick few big ideas and really leapfrog on them.
They are saying, let's not do in the budget, Pankaj. Budget bahar karenge.
Happy. They've done some of those things. I'm
exactly.
not. We're looking forward to banking reforms. Now she's announced a high-level committee on bank reforms. The government has already given a draft paper on the NEP. The biggest reform sector crying for reforms in India is electricity reforms. Yeah. It's become a political subject. You go through state elections. Those SEBs are in a bad state. It's a sector which needs massive investment, and where we are at a stage where the whole energy industry is going through a huge technological transformation in terms of what's happening, right? So that's a sector which needs the biggest reforms. But yes, that's outside the budget, but we are doing that. So I think it's time for India to do, given the fact I said, probably when I look at India's picture, I step back and look at the big picture. The most comforting thing for me is India's macroeconomic stability. It's a very hard-earned macroeconomic stability over the last 10 years. Now in an environment where globally the world is challenged, we need to really capitalize on our macroeconomic stability, on double down or really leapfrog on some big ideas.
Most certainly.
I agree with you that not all of that has to happen in the budget, but I see a big picture government thinking there, and which is what makes me optimistic on outlook for the economy and markets going forward.
The other thing, Mihir, from a markets perspective, if there was a debate whether the budget will look at consumption versus capex, I think there is an answer right there. There is no big impetus given to consumption at the very least, from whatever little I make of it. I don't know how you think about it. But therefore, if the market was looking at pivoting towards consumption stocks, not looking at capex stocks, is there a rethink now out there?
No, absolutely. So that's what we were discussing before the budget, that the focus on capex should continue, and thankfully it has continued. And on PLI, my view is that I think in the government's mind it's an open-ended approach, in the sense, if they see a potential, in any particular sector, they are more than willing to go out and introduce special PLIs for that particular segment, etc. So I don't think we need to worry too much about the actual allocation to PLI. In my mind, the government is treating it like an open-ended thing. And the best thing about the budget this time was there was not much to be done in any case. Your income tax cuts were done last year. Your GST cuts were done last year. The single tax on tobacco was done last year. So there was not much to be done in any case. So I think as long as there is nothing negative, it should be business as usual.
Okay, some details coming in, and you'll have to cut corners somewhere. So the PLI for mobile and IT hardware, for example, versus a 9,000 crores is now 1,527 crores. From the data that we have. So a huge drop there. So this PLI that is coming in some segments is coming obviously at the cost of others. You have, of course, some more of that fine print coming in as we speak, and we will be focusing on those as well. My question now is, and Mihir, I'll come to you, as someone who manages money and I would say aspirations of investors right now. And the stock markets in that sense are also aspirational for income, to double up your income, or at least to give you some support apart from anything else that you do. What is the outlook looking like when the focus is on, okay, go slow on F&O? Is that an impetus to cash markets? Is that now going to be another tough set of period for the next few months?
I don't think, as this STT and all that, LTCG, they are all irritants in the short term. But if the market does well, which does well when the economy is doing well, then all is forgiven, right? So it's more important to get the economy back on track in terms of the EPS growth for corporates, stimulating the relevant parts of it, get the FII money in, stabilize the rupee, and hopefully seal the US trade deal. I think those are the bigger factors that are going to be driving the market rather than the STT, etc.
Got it. Now, just before I come to Nilesh and Shanti ma'am, Manish, there's a lot of chatter and a lot of confusion. So just want you to explain this, right? 16 lakh crore was the estimated gross borrowing. It has come in at 17.2. The number last year was 14.8. 14.8. So is this net? Yeah. So is this a worry, 17.2?
Very.
It is a worry.
Market, basically market does not experience net borrowing. It experiences gross borrowing, right? And that number is very high. Rates, actually the bond yields have risen,
right?
And to the extent if the number is going to be 1 lakh crore more, it's going to irritate markets, and so there better be some clarity in terms of composition of it. Maybe the T-bills are higher than this, so that we need to see.
What will assuage the market?
If the dated borrowing is not very high and the T-bills are relatively higher, or there is a bond swap there involved, so that we'll see. We will get to know in 10 minutes time.
Okay, fine. Nilesh, you want to come in on that? And part two then, therefore, you mentioned business as usual, right? But if this is indeed not an equity budget, but a bond budget, right? What is it that you will seek in terms of clarity, just so that the yields don't really go hyper from where they are right now already?
No, I think ultimately what's going to matter is transmission. I mean, the rate cuts which have happened, or all these measures which are essentially done to bolster the bond market, finally should lead to lower cost of capital. If there's a lower cost of capital, that itself will be hugely positive for the economy, for businesses, and for consumers. So that's really what I would want to look for. That is there rate transmission finally happening? Is the cost of capital coming down or not?
Okay, so now company reactions coming in. Rajinder Gupta, Emeritus Chairman of Trident Group, with us on the phone line. Mr. Gupta, can you hear me, sir?
Yeah, yes, please carry on.
Okay, what do you think has been done for the textile sector, and has enough been done? Because especially export-oriented companies have been suffering because of tariffs. Were you hoping for more, or do you think that there is some support that has come in the budget?
Well, I think first of all, it's a well-articulated budget for working on the 2-tier, 3-tier cities, and maybe it is just rationalization or bringing efficiencies to working of the government. But on textiles, maybe they could have been done better. You will appreciate the amount of tariff hit by the industries, but I don't know what Indian government could have done. I'm cautious about that, especially for the textile industry. May not see a very quick gain in a very near future, but gradually, if something happens on this mega park or something happens on alternative fabric or something works on alternative marketing, could have been done better. I still believe something for promoting the Indian branded cotton, like what they did in cashew nuts and other areas, had they also made some special incentive or some how to be make special Indian cotton or qualitative or branded Indian cotton, could have also helped in terms of promoting or adding value to this system.
Mr. Gupta, so you would have hoped for more. Is the current state of business because of the pending India-US FTA, but some of the other deals signed, looking up, or is there a case of worry right now? And would you have therefore hope for the budget to address that?
I will not say the case of worry. It's a case of, well, there is a challenge, and one has to now get the opportunities available with the FTA opening up with the Europe and UK and other countries. Those are opportunities, but there's a time lag for 6 months to 1 year for the same, and one has to get prepared. But yes, there is an immediate impact, and I will call is a challenging, not worrisome.
Gupta, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time. Some more details, by the way. Some more things to be just spoken about. One was textiles, of course. The rare earth corridor. Sorry, Tamanna, are you picking up anything?
Yeah, just the PLI scheme for automobiles and auto components. The outlay has seen a good jump from 2,091 crores in FY26 to 5,940 crores. So that is a decent sized jump. And if you remember before the budget as well, we were speaking about how PLI push might be now spread beyond what we have already seen. So we've done that for mobile phones, etc. But auto and auto components also seem to be in focus right now.
To me, that's a great thing, because if you look at the number of cars and the way even foreign car makers and OEMs have grown in India, their component manufacturers are not manufacturing in India and exporting. So I think one big area where India could integrate into the global supply chains of these companies is really looking at how do you get to quality component manufacturing and integrating into the global supply chain. So I think any effort there to increase the manufacturing and export competitiveness would be great.
Okay, just coming back to buyback, and Nilesh, you were watching that buyback announcement with keen interest, right? You, Mihir, Pankaj, everybody, right? So what does this mean now? Some positives for IT stocks in terms of the cloud announcements, but is this a net negative in terms of the buyback announcement that has come in?
So I think, Neeraj, for IT, there was also one more announcement which happened regarding those product development and things of that kind. There was something to do with safe harbor and all of that. I'm not entirely sure what exactly was that. But it sounded positive, and it could be a positive for some of those ER&D companies which do engineering R&D kind of stuff. But honestly, couldn't get more detail on that, but one has to watch out for that.
Okay, Pankaj, did you get that? Yeah. Sorry, because
so
he
on the buyback, I think there is clear.
No, on this ER&D piece that he's talking about, was there something that you?
No, I could not.
Okay. So now I'm coming back to you on buyback. On buyback, Nilesh, first to you.
No, I probably heard there was that 22% and 30%. So I wasn't too sure about what that has happened. But net, what it meant was that promoters who participate in buybacks will end up paying a higher tax. For rest of the investors, it is probably the LTCG tax rate which will now get applied. So if that be the case, at least that part of it is positive.
Okay.
Versus earlier getting
the clarification is promoters will pay the same tax rate. So if the promoter is a corporate entity, he'll pay 22%. If the promoter is a non-corporate, they'll pay 37%. And investors will pay capital gains short-term or long-term basis their holding. So it solves the problem for investors.
Minority particularly.
So promoters will still pay the business tax rates.
So ideally, it should have been brought on the same footing, because ultimately it's the promoters who will have to introduce buybacks.
I think they say you find devil in the details. Today we're finding the opposite of devil in the details, because as the details are coming out, it's getting better and better. So the UPI scheme related incentives are also up sharply. Just pull up Paytm if you can. 437 crores is what it was. It's now 2,196 crores. One Moby Quick also seeing that sharp zoom. So it's not as if only one thing has been taxed and then nothing else, but some good stuff there as well. I think the divestment figure has also been better than expected. Look at what's happening with the markets also. You're seeing some recovery there as a result, isn't it?
Yes.
So some of these points also to be kept in mind, Mr. Kamram, that you need to look at the whole picture first before responding.
Yeah, I think what happened was the STT hit the markets because it came towards the end and everybody focused on that. And now everybody is reading the small details to say, okay, now there are areas where it is very, where there is positive news and beginning to sort of look at each one of these, right? So like we said right at the beginning, fiscal prudence, very good. Focus on infra, very good. Some of the sectors receiving more attention than the others, which is infra, very good. But it is a balance, right? You give and you take. So there will be some give and take. So as we get into details, I think you'll find it's okay.
Okay, the man with those details with us right now in the studio. Also, the person who had put out in his Khabar segment that there would be an STT increase. That is exactly what's happened. So, Somit, kudos for that. But you've been going through that budget document. Here's the profit intelligence that you need at this point. What really is the fine print? Somit, take it away.
Well, firstly, coming on the STT front, that's the major negative that has come in for many capital market players, given the fact that most of them were expecting a reduction to happen. But in fact, there is an increase that has happened in futures to 0.05 from 0.02, and when it comes to options, it has increased to 0.15% from 0.1 or 0.125 based on premium or exercise STT that you're looking at. Now, this is quite negative for most of the capital market players. When it comes to the fiscal deficit target, that is slightly pro-growth, given the fact that Street was expecting the fiscal deficit number to come in at 4.2% for FY27, but it has come in at 4.3. So slightly pro-growth is what the Street is seeing at when it comes to the fiscal deficit number. Now, the 10-year government SEC yield, now this could have could rise further going forward, given the fact that the government borrowing target is higher, and FY27 gross borrowing stands at close to 17.2 lakh crore rupees, which is spooking the financial stocks. In fact, that was one of the major reasons why we saw a sharp downtick. Apart from that, nothing has come in on the exemption limits for PSU Bank on FII, and that is also one of the reasons why PSU banks were also down in trade. Apart from that, if you look at the capex increase, that has come in at 10% on a YY basis, pretty much in line, positive for the capital goods company. PLI for mobile, capital for defense, if you look at the outlet, for PLI for mobile and IT hardware, if you look at, yes, in the speech, the FM did say 40,000 crore rupees as the amount entirely for the PLI, but for mobile and hardware, the amount is just 1,527 crore as against 9,000 crore that we had seen previously. So that is negative coming in for Dixon Tech specifically. UPI scheme-related incentive has been increased significantly, as Tamanna was mentioning. But for defense also, if you look at, the target is kept at the defense expenditure target has increased by nearly 22%. Again, pretty much what the Street was anticipating, and in line with what 20 to 25% is what was anticipated, and that has come in. And for oil marketing companies, so far from what I've gone through, I could not find anything on excise duty hike for petrol and diesel. So that's a major overhang that could go away for oil marketing companies like HPCL, IOCL and BPCL.
Well, watch out for some of these as well. Okay, and now we'll have some conversations going in from corporate India as well. In moments from now, we'll actually cut across to the CI panel, so maybe go through that as well. We'll just wait for the queue there. But just one quick question now. What does one do from a market's perspective? And, I asked this question to Mihir earlier. Pankaj, I'm asking you now. What does one do from a market's perspective here on?
Back to basics. So I think India.
But that's the boring answer. No, give me something more.
Long-term investing is boring. So I think India remains a 6.5–7% growth economy. We're coming out of a cycle where we had just about 2% corporate earnings growth last year. So we're coming out of a very low base of corporate earnings. Corporate earnings will accelerate this year as we see cyclical revival in the economy. The government has, meaning there's been a fair amount of fiscal and monetary stimulus that has been infused into the economy over the last 15 months. And that will play out in terms of demand recovery. We're seeing early signs of it. So I think we will get back to, from a market's perspective, to a double-digit earnings growth growth this year, and that should provide enough fuel to fire for the market. I think the good thing is, I'm just saying, when I think about things from a more 12 months perspective, I really feel concerned about a lot of things that are happening in the world. The good thing is the government of India has a lot of dry gunpowder. If something goes wrong globally, the government has a lot of dry gunpowder at its command, which it can fire to deal with macroeconomic global challenges. And I think that gives me comfort. So India is a market or economy which has downside support, and you find your growth stocks and play it. Growth this year will be better, both from an economy perspective and corporate earning perspective. So I think that's enough tailwind for equity investors going into this year.
Okay, so very quick reactions coming in. Shimi Chaudhary at CII speaking with Shashwat Goenka and Chandrajit Banerjee. Listen in.
Reforms which was expressed, announced, proposed, is going to achieve that 7%, because that, I think, quite a miracle number. If you see, from 6.5% to 7% medium-term growth is something, especially when we are in a middle of tariff turmoil.
So it's not only that. I think we are also in a position where the base is already quite high, so you are growing on a higher base for us. So I think we have every reason. The basic structure looks to be strong enough for a 7% plus in the years to come. But I would think that it can go much beyond, because the focus on bringing down the cost of doing business and the attractiveness of the private sector to move to invest further. The private sector has already started moving quite strongly into capex. And today, if you really look at the capex which was announced, which itself will crowd in a lot of private sector investment. And very, very important point that came out in the budget was the focus in developing these logistics hubs and these corridors, which would in fact improve the way we are able to increase our competitiveness of exports. So all in all, it looks like that we are on a strong growth trajectory.
And of course, the kind of measures and
Okay, let's get the view from Deloitte as well, because that's the next one, right? Rajesh Gandhi is with us, and we need to understand the impact on taxations. Rajesh, anything that you found interesting in the fine print?
Yeah, absolutely. Thank you, and pleasure to be on your channel. Buyback tax, we have all spoken about. I just want to clarify a little bit, because the finance minister's speech did talk about 30 and 22% tax. But when it comes to non-promoters, the buyback tax will be 12.5%. When it comes to Indian promoters, it will be 22%, and foreign promoters tax will be 30%. I think this is a master stroke, because on the one hand, they have reduced the buyback tax from 30% all the way down to 12.5%. But to ensure that buyback is not used by, or rather misused by promoters, they have kept the tax from promoters at a very high level. So I think that's number one. STT, again, I think you have spoken about earlier, and a lot of our participants have spoken. I would not think this is a major impact for FPIs. Because unlike HFTs and other algo traders, others don't really care as much about the STT rate. Though I think the market expectation was that STT rate should be reduced to some extent, or either the capital gains tax rate should be reduced. So sentimentally, this doesn't look great. But otherwise, I think from an economics perspective, FPI should not be too impacted by this. FPIs were also not expecting reduction in capital gains tax rate, considering the rates were increased 2 years back. So I don't think there could be a policy flip-flop around that. That would have looked bad. Couple of other things I've noted, and I think very positive things in the budget from a taxation perspective. One is the benefit on foreign investment, cloud services, data centers, toll manufacturing, getting very strong tax holidays. The second important is from a transfer pricing perspective, a 15.5% markup is very beneficial. Today we talk about anywhere from 18 to 24, and leads to a lot of litigation. So 15.5, and that too increasing the threshold from 300 crores to 2,000 crores is extremely positive for foreign companies. And lastly, I think even on the administrative side, very welcome changes in terms of rationalizing the prosecution and penalty provisions, underreporting and misreporting. They have given immunity for foreign asset reporting, like a Vivad Se Vishwas scheme, where if you have disclosed your income, you only pay a 1 lakh penalty for not disclosing the assets. So I think all of this has been fairly positive from a compliance and litigation perspective.
Okay.
Maybe I could just add one more point.
Yeah, sure.
Maybe I could just, Alex, add one more point from a policy perspective. The Honorable FM mentioned about Indian overseas residents now being able to invest in the PIS route, and the PIS route increases from 5 to 10 and overall in the company to 24.
Right.
To my mind, it looks that even foreign citizens might be covered in this, because she did not speak about NRIs or OCIs. So foreign citizens might probably be covered in this route. That's what it looks like. We'll have to wait for the final.
Got it.
And TDS on PIs is the only challenge. We'll have to see if they rationalize somewhere on that.
Okay, well, maybe we'll get the updates during the course of the day, but thanks so much for giving us this very quick snapshot. Appreciate your time, quite frankly. Okay, back to our panel, and Manish Dangi. Now, we're just summarizing the initial thoughts from our think tank, and thank you all of you for being with us. But, Pankaj mentioned that he thought that this is business as usual. The markets are flip-flop, if you will, but have recovered from the lows of the day. Is this the market giving the final verdict on whether on the fact that the budget is not all that negative as well as the initial thought was, or we need to monitor it for the next few days? Your thoughts on the overall?
So you don't know counterfactual, but ex-STT it would have been marginally positive.
Ex-STT.
So I think counterfactual.
That's true.
Then it's like it's a specific irritation, on your skin. That's very specific asset. The gross borrowing not very high. A bond market would actually cheer because fiscal deficit is lower. I think we're in a good shape. The credit cycle is back. Both household leverage, and to a certain extent, very little sign of it, but corporate leverage cycle is starting to come back. The 14.5% growth looks a little high in terms of credit growth last month. But it all suggests that I think a lot of stuff, good stuff, which was done in last 12, 18 months, is starting to reflect in the economy. And I think, we are in a good shape right now. I think we will deliver a 7% growth, a decent amount of leverage cycle back. Policy sort of stimulus has been there. 2.5 lakh crore worth of GST plus income tax stimulus was there for consumption. You didn't have to do anything this time. And to the extent, had STT tax not been increased, as I said, market would have been higher. I agree with Pankaj. There is the profit cycle also starting to look up now finally, after long. And the nominal GDP growth likely at 10% is reasonable. It's a long-term, like 8-10 year.
Slightly higher numbers as inflation picks up as well. Yep. So could be interesting. Okay, Mihir, should something have been done more for equity markets, considering that we found out that the disinvestment target it's circa 80,000 crores? We know that the government doesn't time these exits very well, but they've missed those numbers consistently. Would you on balance say that this is a budget that will enable almost all of those things, including the divestment of 80,000 crores in FY27?
Yes, I think so, because while the market's been okay, a lot of PSUs actually have done well in the stock market last year. Including the banks and some of the defense names, large defense names, they've done well. So for the government to raise 80,000 crores should not be a big issue, frankly speaking. And, as I said, once you have the economy doing well, this STT will be forgotten. Unfortunately, what happens after 3-4 years, something else comes up. So in 2019, we're not expecting increase in cap gains tax, but it happened. But for 3 years, we forgot about it. 4 years, when the markets were doing well. So these things come back to bite you when the market's not doing well.
True.
So that was something which was avoidable, but that's the way it is.
Yeah, I think directionally, actually, what the indication is the pain point, that any kind of activity that the government deems as speculative will be curbed further. For that whole bump up in capital market stocks, that hot growth story, is there a very clear break on it right now, Pankaj?
Yeah, meaning capital market is much more broader. Markets have done phenomenally well. The kind of inflows we have seen in the asset management industry, and new investors have come in. Just to give you a context, the number of unique investors in India's capital markets in March 20 when COVID happened was 1 crore. 5 years out, that number is 5.5 crores. So we have taken our investor base 5.5 times in the last 5 years. obviously a lot of these investors have gone towards trading, which we don't want them to be doing. Yeah.
No, I'm asking from the perspective of some of these stocks. I mean, the Grows of the world.
I don't know about Grow specifically, but
yeah.
Angel One,
but in general,
this bucket, this hot story seems to be deflated a little now.
I don't think so, because we are an economy which accumulates 38% savings. Capital markets play a very important role through various business segments in intermediation or disintermediation of or channelizing those savings. So I think growth in different segments of capital markets will still remain robust. It might impact F&O trading volume, but that's just one part of the market. The other parts of the market in terms of asset management, wealth management, advisory, investment banking, IPOs. We are the third largest IPO market in the world now. Meaning it can't get better than that.
I think Pankaj is very happy that there's the STT coming in. The thighs in this conversation, he said, traders jao, investors jao. He's very happy.
I don't trade in markets. We are the third largest. Bankers have made their biggest pot of money in their lifetime in India in the last 3 years. Every banker has 40 or 50 deals lying on his table. So I think the other parts of capital markets are doing exceedingly fine, and I think they'll continue to do well.
Not just the equity, in a sense, outside of public equity, there's a lot more buoyancy today than what it was in 2019-20 in private markets, private equity, venture. There is a pool of capital today available to fund relatively frontier businesses with perhaps don't size liquidity today. Yeah. Private debt markets are actually growing very rapidly. So as he said, it's just the hyper focus on just public market and the two on the equity. There are bond market, there are credit market, there are private equity market, and so on and so forth. And I think you have come to a point where there is enough pool of capital available to fund things outside of public equity.
The availability of risk capital in India has gone up significantly.
No, I just have a point here. No matter what you say, public markets is the ultimate place. Okay? All these guys can keep investing, doing venture capital investing, private equity investment. Exit you will get only from public markets. All this venture capital and private equity guys, they look like rock stars and have seemed to have done a great job. That would have not been possible without public markets.
I want to interject
and you
here.
need public markets here, both from fundamentals, which means corporate earnings need to go up, valuations need to be reasonable, but you need volume support. You need volume support, and without volume support, these kind of exits become more difficult.
Nilesh, you don't get exit through F&O stocks. But
it's not about F&O, it's about volumes. It's about volumes. I think there's no doubt about it. I think India is great, economy is great, direction is great, public markets over a period of time will be great. I think what in the short term, I think is more about the sentiment and the impact on volumes. No matter what we think, and I don't think we should sidestep the importance of public markets. I think they are extremely important. No matter what wealth management firms, whatever they want to do, they may have created alternative investment options, all of that. Ultimately, you ask any wealth manager, where does really the mullah come in from? It comes from public markets.
So which is why that pain on some of those stocks.
Absolutely.
I'm just quickly going to get a view in from Dr. Anish Shah, Group CEO and MD of Mahindra Group. Dr. Shah, thank you so much for joining in. I mean, we've heard your thoughts pre-budget and it was a push for growth. Do you think the finance minister has delivered on those aspirations?
Hi, good afternoon, Tamanna. Yes, the finance minister has delivered. This is an excellent budget from a growth standpoint. We see a number of very important foundation elements of building blocks because the budget focuses on infrastructure, which is a very key aspect for us as we think about getting manufacturing to be more competitive in India. It focuses on inclusion of SMEs in a much bigger way in manufacturing. And with Atmanirbharta, the rare earth corridor, and more importantly, inclusion with a wider participation, the benefits of economic growth with small and marginal farmers, women, capacity building for youth, all of these make it, in our view, an excellent budget.
In the sense that you know that rating agencies are rewarding you for the hard work that you've done on the fiscal glide path, so on and so forth, and with the limited resources available, do you think what the government of the FM is trying to say that the budget will effectively be a statement of accounts, trying to do the minimal? There is a lot of room beyond the budget as well. So don't look at this as the only be all and end all.
Yes, and Nikhil, that's been the case over the past few years because the budget has always been growth oriented. It has focused on capital expenditure, which is the case this time as well. And it's important for us to look at India getting on a very strong path towards continued economic growth, that's when India is going to start taking center stage in the world. And this is one big step in that direction.
There's some uptick in the outlay for auto ancillaries. It's a small base, of course, from 2,000 to 5,000 is not really large, but in some sense there is there. There are a lot of things happening beyond the budget in that space as well with the India-EU FTA, so on and so forth. Would you have hope for some more specific announcements for the auto and the auto ancillary sector that didn't come, or that's fine?
So I think, Nikunj, India has passed the era when a budget gives a fillip to a certain sector. Our sectors have to be competitive globally. And from an auto standpoint, I would tell us we are competitive globally. So the budget has to set India up to be more competitive from a manufacturing standpoint, where we can make in India for the world. And the ecosystem that's built is what's required. The EU FTA we see as a very positive step, because I think it's been a very fine balance in terms of ensuring that companies in Europe set up manufacturing plants in India. That is an essential part. And I do think that the government's done a very nice job in terms of setting up the EU FTA where that will happen. From a competitive standpoint in the auto industry, it really doesn't matter, because the FTA does not allow any of the vehicles to come in to be sold cheaper than vehicles that are sold in India right now, because manufacturing in India is being done by most foreign makers. And therefore, overall, what we see here is a path to building sustainable long-term growth for India. The foundation in terms of the building blocks that are required for infrastructure, for logistics, for other items to make India competitive are being put in place. And that is what we would want as a sector.
Reiterate that question and you just make it more specific. There were concerns that Indian OEMs and also among them your group would be hit by the India-EU FTA, and if people have more choice, then perhaps you'd lose your competitive edge. Is there no threat of that even as India continues to ink more bilateral treatments across the world?
No threat of that at all. And in fact, there was an analyst report that shared those concerns, but was updated a couple of days later as more information came in. And as I said, we compete with all the foreign makers in India. And it's not possible for someone today to make a car in Europe and send it here and sell it cheaper than it is available in India. What the FTA does, though, it opens up the European market for us. And therefore, we see this as growth in the Indian market, which will make us even more competitive, and therefore is a positive for us. So while there has been some initial commentary when all the facts were not in place, I think when the facts came in, we see this as a huge positive from our standpoint.
And just one last point, Dr. Shah. To your mind, what was the biggest highlight of the budget? One thing where you said, okay, India is talking the talk which we need to right now in the context of what's happening geopolitically?
There were multiple highlights, Tamanna, but the one that I personally liked was the Sabka Saath, Sabka Vikas. I think everyone needs to be part of the economic growth story. We're going to see very significant economic growth. India will add $5 trillion to the GDP in this decade. And from that perspective, it is important that everyone's part of that story. And I think that has been the highlight of this budget and continued actions that have been taken by the government over the past few years.
Okay, thank you so much, Dr. Shah, for joining in and, speaking with us today after this budget. I think an important reiteration there also coming in on what is going to be the impact for the domestic auto industry because of the EU-India FTA. I want to just pull up the Nifty Auto as well. The worst hit, of course, today is the capital markets pack. The Nifty Auto also seeing some pain, even though those outlays have gone up from about 2,091 crores to 5,940 crores in the PLI scheme. But as we wrap up on our think tank as well, first of all, congratulations to all of you for listening to the budget and coming out with that great analysis. But some hours left for trade. What are you buying today?
So, it was business as usual except for the small this and that. But so I don't think there's a great need to tweak the portfolio based on the budget per se,
And what about you, Pankaj?
Yeah, I think my view is that we are seeing a consumer recovery in India. So I've been a buyer into consumer stocks for the last few months, and I think the kind of stimulus that we have had in the economy will play out over the course of the year. And probably I'm really looking forward to, I think we'll have the 8 pay commission coming by the end of this year, early next year. Plus on top of that, also don't forget, this is an election heavy year. We have 4 state elections this year, and early next year then we have UP, which is mother of all elections. Significant part of financial stimulus or fiscal stimulus now is also happening through state governments around elections. So I think even at the state level, we'll see continued pump priming of the economy. And I think that will support consumer demand and consumer recovery in the economy.
But your buying or selling has nothing to do with the budget, at least this time. It's the preset thing. Okay.
One good data point we were just discussing today morning is that corporate tax for collections for the month of December have actually been quite decent. They've been picking up. So hopefully that's some leading indicator.
Plus credit growth also looking okay. Okay, great. Nilesh, same question. If you were to be buying into the markets right now?
No, I think clearly consumer continues to be the strong area. I mean, we can't forget the fact that a lot has been done for the sector over the course of last 1 year. Two, there's been some decent correction in the cap goods space. Hopefully, if commodity prices come off, then that would probably kind of ease pressures on margins for them as well. And the whole focus on infrastructure in the budget reinforces the kind of growth prospects for a lot of those kind of companies. The third area is within the overall financial pack. If it was like both credit and capital markets play, I think it now kind of goes back to the credit play. And with obviously the economy booming, credit cycle coming back, probably I think the banks will have a better place to be. That's a better place to be versus the capital marketplace.
Got it. Okay. By the way, somebody's buying the data center stocks. Anantraj is up 11%. But Manish, final word with you before we wrap up. What are you buying? If anything?
I've had this view, somewhat contrarian. India tech is a better way to own India global AI if you were an Indian investor. And I think, I made this point in your show that I kind of think that India IT and tech will do decently well in the next couple of years. I think that's a better bet.
I thought one of you will say I'm buying a movie ticket for the rest of my Sunday.
Abhi to ja raha hu. Dhurandhar is on Netflix.
I thought people will watch the Djokovic match.
2 is not yet on. Dhurandhar 2 is not yet on, right?
No, it's not. No, on Netflix, number 1, Dhurandhar 1 has come.
Dhurandhar has come.
Okay, we'll take a very short break here. Thank our think tank, but all the action continues. On the other side, we have Rashesh Shah and Sandeep Bhatia. Don't go anywhere. This is your budget headquarters.
PGTI comes to you from the heart of South Mumbai at the historic Willingdon Sports Club. The city's classic layout provides the ideal canvas as India's finest golfers share the fairways with the country's top corporate leaders. Mumbai style. Watch at these heights.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म, शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Masterstroke Art Awards. Coming soon on the NDTV network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है।
Budget 2026, the growth agenda.
Hello and welcome to our special budget coverage, the Union Budget of 2026 and the ongoing coverage here for the growth agenda right here on NDTV Profit. I'm Nisha Podar. With me are my colleagues Hiral as well as Alex, and we will help you decode the budget forward and what it means for you and me. When it comes to the key takeaways, of course, markets are spooked by the STT hike on futures at 0.05%, STT on options premium hike to 0.15%. Those two are the most important aspects really impacting the overall market sentiment. But there are many positives in the market when it comes to the fiscal prudence that has an impact on the economy. The fiscal deficit for 4.3% of GDP for FY27 has been stated in the budget speech. 12.2 lakh crore rupees of capex, an 8% increase over the last year, boosts the overall economy. various sectors which need the support of the government at this particular time for putting Indian economy and Indian manufacturers on the global map are biopharma, R&D boost given, semiconductor 2.0 scheme, banks will have a banking committee, rare earth minerals, so the mineral-rich sectors and states will be in focus, and there are schemes announced on that, data centers, tax holiday for the cloud services of the MNCs till 2047, tourism through various schemes, even including medical tourism, has been given a boost through the budget. And also remember, reducing the import dependence and also looking at indigenous manufacturing has been one of the special highlights of Finance Minister's budget this time around. Chemicals, container manufacturing, textiles, parks, MSME boost as well as micro enterprises. Support through funding and liquidity is coming in as a big support, coming in for the smaller champions and the future of corporate India for tomorrow. Nuclear energy inputs will have no duty till 2035 is coming in as a big boost as well. When it comes to a tariff war, global chaos situation, exporters have been given a one-time facility to sell in the domestic market at competitive rates. So that is a one-time benefit given to the exporters who may be struggling because of the tariff situation. So these are my key takeaways. Alex, there are many things when it comes to personal tax as well.
Absolutely. But you know what, we'll come back to that. Let's get on Rashesh Shah as well as Sandeep Bhatia, both with us at this moment to comment on what the market is really reading from this. And I'll go to Rashesh Shah first. Rashesh, one can argue that this is not a big bang budget. It is prudence, it is pragmatism in the face of an external sector that is uncertain. And so from that perspective, would you rate this? How would you rate this budget, and what is your key takeaway?
Yeah, absolutely. I think you hit it on the head, saying that it is a more a BAU kind of the budget. They have maintained steadiness on fiscal consolidation, on everything. The one good thing I see, obviously the market is spooked with STT, but I think FNO, STT in the long term, I don't think it affects equity markets as much. I think the good thing that has been there is the start of the bond market reforms. We have been struggling to get the Indian bond market going because ultimately the economy needs both. They need equity and we need credit. And credit was flowing through the banking system, but we need credit to flow to the bond market through InvITs and REITs, and also even the REITs set up the MSME reforms to actually support credit for MSME. All these are good ones, and I think there is a focus on credit becoming more efficient in the economy. Equity market, obviously, there is a fair amount of growth happened in the equity markets, but Indians have been buying, foreigners have been selling. But we all believe that the equity market is going to come back when growth comes back, earnings growth comes back, which hopefully is maybe a couple of quarters away. From the last quarter onwards, corporates' earnings have started inching up. So there are some good news on that, but it's early green shoots. But I think the highlight that I'm more excited by is on the bond market and the credit market growth.
Okay, Rashesh, good afternoon. Hiral on this side. So bond market, credit market growth is the key highlight that you're picking up. What is your view coming in when the STT hike that has been announced, when you talk about the FNO side of it? I mean, being a veteran in the industry as well, I want to understand, how do you think that the street is going to take it? Because as soon as the announcement came, you did see the markets crash. There has been a recovery that's come in now. What do you make of this one?
I think I've always seen over so many years that the market always reacts very emotionally and in a knee-jerk manner. I mean, immediately, because, after you read the actual fine print, you read the document, you see all of that, the real effect of whatever are the changes, they come, I think, after a couple of weeks. But yes, the STT was a hit. The market was not expecting it. But, FNO growth has been very, very sharp. The growth in the FNO volumes and all. And we have heard from time and again from SEBI, from the Ministry of Finance, that this FNO growth, they feel, is not as productive as, the underlying market of, equity investments and capital formation. So I think something or the other on FNO would always be coming. A couple of years ago, the limits were imposed, the F&O options were curtailed. So I do think that there is a clear indication that they don't want this runaway growth in F&O market. So markets should accept it in its stride. I don't think the long-term returns on equity market will get affected by how much what changes happen in the F&O side. So there is a knee-jerk reaction, but I think as people see the fine print, it will come back to stability. It's a BAU, kind of a budget. So no big bang stuff out here. We have to again go back to to seeing where growth comes back.
That's right. In fact, Rashesh, hi, this is Nisha here from the studio. So you said it's not a big bang budget, but a lot of sectors of the future and the sectors which needed probably prominence as the new age sectors for indigenous manufacturing, R&D and innovation, and to also be more competitive globally. They have been given a lot of emphasis. What is your sense from the sectors of choice which have seen an increase in the outlay as well as real focus on the budget?
There are a lot of things for the broader economy as a whole, for MSME, for manufacturing, for exporters, for even, I think, infrastructure, all of that. There is a lot of that. It has been there every year. And I think all this has helped. Our infrastructure has grown quite a bit in the last few years. I think MSMEs are also getting slightly better off, though they still have access to credit and all that affects them. Quite a few MSMEs are export-led also, so the export market also affects them. So I think there are risks globally for Indian economy because of the export part of it. But on the whole, I think there is a lot of even the freight corridors that have been announced have been, very encouraging. The asset recycling approach, that is also very encouraging. So you are right. There are, I think, maybe 18 or 20 good things out there, which are all small, which I think a lot of the investors, when they see when they see the impact of that, they will start at least getting slightly more positive rather than having a knee-jerk reaction. But on the whole, I don't think there is one big theme out there, except it is more, if you ask me in one word, it will be business as usual. I think we are maintaining the same fiscal prudence, the same growth, the same focus on manufacturing, exports, all of that.
No need to rock the boat as the fastest growing economy in the world. Rashesh, thanks so much for taking the time.
Thank you.
Pleasure speaking with you as always.
Thank you.
All right, we're also joined by Sandeep Bhatia, who's Managing Director and Head of Equity India at Macquarie Capital. Sandeep, thanks so much for taking the time and for waiting by. I really appreciate that you have. Just give us your initial thoughts on the fact that they've hit that 4.3% mark on fiscal deficit, as opposed to the earlier thought about 4.2%. Of course, they're describing it as debt to GDP as well. And they've talked about the glide path that they've reached to this point, a 10% increase in capex, 20+% increase in defense. What does that tell you?
So I think 4.2, 4.3, but we have to remember there's a new GDP series getting unveiled and end of February, and that would mean that actually the GDP will most probably see a higher number than what has been penciled in. I would think that would mean that actually the eventual percentage numbers on the new GDP series would be lower than 4.3%. What actually matters in operating terms is the gross borrowing and the net borrowing. And to that extent, those numbers are broadly in line. I would not get too worried just by the fiscal deficit number. The operating part of the budget is actually very interesting. I think markets are currently, I would say, in a Rudali mode. They are very unhappy and they are really crying and wailing hard. I was very circumspect when I got into this budget session, because I was not as hopeful on capital gains tax, and everyone was thinking that we would see concessions there. Those, of course, have not come in. But what's come in, I think, is laying foundations for long-term growth. I think, as the previous speaker just discussed, the credit markets, especially for municipal bonds, is extremely important. And the best way to raise growth rates and to raise quality of living is to have Indian municipalities and Indian cities and towns have better infrastructure and better public facilities. So if we see a vibrant municipal bond market like we see in the US, all that also is actually very good for infrastructure capex and the quality of our lives. So this is something which is definitely good. I also see the cut in cess, TCS on travel tourism. That's good for the hotel industry. That's good for a lot of small businesses which are in this travel tourism business. So all in all, it's not as bad as the market immediate reaction makes you think. The only thing I'll say that in India, you always have to remember that the pressure to raise taxes, both in terms of fiscal pressure to raise revenue and ideological nuances of taxing the rich, is a continuous theme.
Sandeep, an interesting point that you made when it comes to the credit market. But my question to you is, you mentioned that the markets are really sulking on the way the budget has come in. Your projections for 2026 has been what, around 12 to 13% kind of returns. Now, with this fiscal math right now, the capex that we've heard in terms of FY27, does that give you confidence in your target, or does it make you get to a risky situation where you would probably say that there is a possibility of missing the early projections?
I don't think there's really a big risk, except if we see the US AI theme continue very strongly. Now, actually, Macquarie view is that the US AI theme is going to continue for the next 12 to 18 months. And that is actually the biggest headwind for investors, especially foreign investors who have seen good returns in the US and other markets. So because India is absent on the AI path, though there's some movement to build data centers in India in this budget, but this is the real issue. While China and the US have significant waterfront in terms of AI plays, India is definitely far behind. And that is the reason why the FPI flows, in addition to the valuation, which have been very high, have been negative. I think the valuation correction, which I see today happening, if that continues for the next, let's say, 1 month or so, actually the market will be in buying territory.
All right. So, Sandeep, one aspect, after listening to the entire budget and fine print is still trickling in, which sectors and areas now you'll be much more bullish on? And a lot of hope was with the defense sector and increase in outlay. So that is one miss from the budget, from the key expectations, which was a popular expectation in the market also.
So, the budget itself will not give you a reason to invest in one specific sector. I don't think one event like this is also the basis of any long-term investments, even if it's not long-term. If you take a 2-year view, I don't think so. I think broadly the geopolitics of the world remains in a very fluid and a difficult phase. And to that extent, defense stocks will continue to do well. It's not only the fact that Indian defense spending has not gone up as much, but it's the broadening of the defense sector, which is more important. I actually talked to a lot of private equity investors, and there's a lot of investments happening in unlisted stocks in the defense space, which will continue to come into the public markets over the next 3 to 5 years. So we'll see. What we need actually is a widening of the defense space rather than the very limited names that we are seeing right now. And the issue with these names is actually their own delivery schedule rather than government spending. So if we see these public sector businesses actually delivering, that will be good. And if they can really start exporting outside, then that will be even better. So anyway, so to answer your question, nothing specific to get negative on defense or any other sector because of the budget. The sectors that remain interesting would essentially be, let's say, even TCS is a beneficiary of the AI just because of the budget. But of course, as I said, if the broader AI pressure on India remains, then of course IT sector will not be as strong as it would have been otherwise. Look at public sector banks. State Bank of India looks interesting. Look at private sector banks. ICICI, STFC both look interesting.
Okay, all right. So the banking pack looks interesting. Thanks so much, Sandeep, for taking the time. Pleasure speaking with you as always.
Thank you.
All right, let's talk about individuals and what this budget means for you beyond the Big Bang announcement. So specifically for your pocket, these are a few changes that you should keep your eye on. The tax collected at source, first of all, for sale of overseas store packages has been cut to 2% or will be cut from 2% to 5, or rather 2 2% from 5% and 20% earlier. The TCS on the liberalized remittance scheme remittance for education and medical purposes will be cut to 2% from 5%. The customs duty is going to be exempt on 17 cancer drugs. It's a very important development there. There's going to be an increase, as we pointed out, on the STT, which is the Securities Transaction Tax on derivatives. There's a waiver of capital gains on the sovereign gold bond only if you bought it issued. This is an important clarification. Starting from the 1st of April, if you bought it in the secondary market, you will no longer get that waiver on long-term capital gains tax. And finally, there's a one-time 6-month window to disclose overseas income or assets. So some of the key developments that you should keep your eye on. We're joined now by Vetri Subramanian, who is the Managing Director and Chief Executive Officer of UTI Asset Management. Vetri, thanks so much as always for taking the time, and especially on budget day. Would you say that within the room that they had, the government has tried to toe the line to bolster spending as much as it could, which is that 10% mark? Maybe a little bit of a disappointment for some people, but that borrowing number has actually crept up a little bit. Is that a concern for you at all, or do you think this is par for the course amidst this global increase in spending by governments?
I'm sorry, you're not audible.
Okay, let me try again. Vetri, can you hear me? Okay, we should try that line again. If we'll try that line again. In the meanwhile, I believe that we've also got Umesh Revankar, who's Executive Vice Chairman of Shriram Finance, with us. Umesh, thanks so much for taking the time. And from the financial space, really, the focus is on what I just spoke about, which is the borrowing of the Indian government. The fact that it's come in at a gross level at over 17 lakh crore rupees, more than the market had anticipated, it would probably cause those bond yields to harden, which is not a great idea for NBFCs and for banks. Do you agree?
See, I do not really have control on those things, because these numbers really represents the industry which I'm in.
Right. So, Umesh, looking at the overall budget, do you think that the emphasis has been on the debt market, and also banking committee is something that is proposed? There are various announcements which are still in the waiting. But what did you make from the financial services space this budget had, and the benefits coming in?
Basically, I saw attention being given to the NBFC industry. FM did mention about the NBFC industry being the credit providers and last mile credit providers. Plus, they are also talked about the technology innovation which NBFC industry has brought in to democratize the credit. This is very important for the industry. And also, I think the Banking Reforms Committee or panel, which they have talked about, we have to understand the details about it. I think it is going to make a big difference, because India government has been talking about building the world-class banks. And I think there is going to be a big announcement on those. I think the committee will provide us a lot of insight into it.
Okay. Umesh, good afternoon. Hiral on this side. So my question coming to you is, we're talking about a high-level committee that will be set up for banking, calling it the Banking for Viksit Bharat. Now, with all of this said and done, what are the factors or announcements in the budget that will benefit NBFC like yours, and anything that you see in terms of that could come in as a negative impact?
I see only positive things. Basically, if you look at the announcement on the infrastructure and logistics, which government is trying to build in, and also government is talking about river linkage, trying to build in the linkage so that what is produced in India goes to the global. So they're trying to give manufacturing a big boost. I think that is going to be a big advantage. And FM also talked about MSME, and the way MSME is likely to have an international market by having the scale and also the infrastructure in place. And certain allocation like biopharma and local industries, I think that is going to make a huge advantage for India, because India is one of the largest food producer in the world. And having a linkage to the world and getting a scale is going to help us a lot.
It's a lot of benefits that could be coming in, and Umesh is saying it's majorly positive for a sector like this. Thank you so much. In fact, we will love doing a detailed discussion as well post today during the week. So that is Umesh Navankar of Shriram Finance. But we'll quickly slip into a short break and we'll come back to Vetri Subramaniam as well, whose phone line has been fixed. But these commercial breaks absolutely mandatory on budget day.
Agenda.
The NDTV Golf Pro-Am, in partnership with PGTI, comes to you from the heart of South Mumbai at the historic Willingdon Sports Club. The city's classic layout provides the ideal canvas as India's finest golfers share the fairways with the country's top corporate leaders, Mumbai style. Watch at Textile.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री।
अवसरों का राजमार्ग है ये बजट। वर्तमान के सपनों को साकार करता है और भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है। दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले। इस दिशा में बजट में बड़े बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमई तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमई को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा। ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से, ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई, इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता, उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव, गरीब, किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
Okay, all right. That's the word from the Prime Minister after the presentation of Budget 2026. He's speaking growth as India heads to becoming the third largest economy in the world. Vetri Subramanian has been waiting by and patiently at that. Vetri, thanks so much for taking the time today. The question I asked you was about that gross borrowing number, which at over 17 lakh crore rupees is perhaps what the street had not budgeted for. It's more than expected. So one would assume that bond yields will harden. What, according to you, are the implications of this?
Good point, Alex. I think without doubt, the increase in the gross market borrowing growth in the economy is about 10%. That's the budget estimate. Gross market borrowings are effectively going up almost about 16-17%. So that is slightly more than anticipated. I would expect the long end to harden slightly in response to this. But I would also say that look, the overall trajectory in terms of trying to bring down debt to GDP and addressing the elephant in the room, which is the contribution, or rather the big bite that interest costs take out of the tax revenues that government earns, is something that they are continuing to chip away at. So yes, maybe hardening in the short term, but in the longer term, it should give bond investors a lot of comfort that the Indian government is not changing its commitment to fiscal discipline and bringing the budget deficit down.
So, Vetri, looking at the overall budget and the kind of emphasis given on certain sectors and some of the tax tinkering as well done, like the UPI side has been given some tax concessions and elevation and an investor's view. How would you look at recalibrating of the sectors of choice post this budget and the positive areas with potential development?
Okay, that's a very tough question, but it has a very easy answer. Nothing has changed, right? So I think it's important to keep in mind that, and I was standing by listening to the PM, and I think he made the point very well that, this is all about keeping our eye on that long-term picture of where we want to be in 2047, Viksit Bharat, but making sure that we achieve it while keeping, inflation and our macroeconomic parameters in good health and trying to achieve growth on a sustainable basis. What is left over in the budget when you look at net tax revenues minus interest costs, the defense costs, the cost of running government is a very small number. And, really there's not much that the government can do to dramatically impact my investment choices, in our mutual fund schemes, or for that of my fund managers, just because of slight, allocation differences they could make in the budget. So I would, very simply say to your question, there is no change. I think, India's growth trajectory is something that we remain confident about over the long term. And there is no major spending change in this budget that should cause any fund manager to have to dramatically rethink their priorities.
So, interesting comments coming in from there. But thank you, Vetri, so much for joining us on the show. And thanks for being patient to stay by as well as Prime Minister Narendra Modi was giving his context to the budget as well. So that's Vetri Subramaniam. But let's move on to our next guest. We have Nilesh Shah, MD, Kotak Mahindra AMC, joining in. Nilesh bhai, good afternoon. I mean, we've taken your comments ahead of the budget in terms of what was the expectation as well. With everything coming in, I think from a market perspective, the key highlight so far has also been the STT, which has been increased. I don't want to ask you your overall view on the budget, but a quick question in terms of the impact when it comes to STT on the derivative side.
So undoubtedly, speculators will be unhappy. All the capital market exposure speculator and not linked with capital market company does carry a tinge of sadness that STT was levied in lieu of capital gains tax. Now STT has kept on increasing thereafter. Even capital gains have kept on increasing thereafter. But at the end of the day, look at from government point of view, STT is like a sin tax. Now, if you are not bothered about your own wealth, shouldn't you be contributing to the government's coffer, government's kitty? So clearly, this is a very tough decision for finance minister. I just hope and pray at some point of time, capital gains tax gets reduced for investors and let speculators pay through STT.
I think the kind of disappointment that you have also stated, Nilesh, is quite visible in the market reaction to this particular budget. This is Nisha here from the studio. Looking at one small positive for the market participants is the buyback taxation on retail. How much of an impact will that make? And overall, what's your sense on the budget in increasing the growth path and the vision for this particular government?
So, Nisha, markets are driven by speculators and their disappointment is visible. For investors, budget does not change their course. And Finance Minister's own word, this budget chose reform over rhetoric, action over ambivalence, and people over populism. It will take time for people to understand that. Second, more than the understanding, it is execution which is critical. Now, in the buyback, what has happened is appropriate. There were promoters who were taking advantage of dividend tax through buyback. Government plugged that loophole. And now, having realized that you are also burning green grass while trying to burn dry grass, Gujarati mein kehwat hai suka bhegu lilu bare. They are now trying to differentiate between promoter and non-promoter. Promoters buyback will be converted into the non-promoters buyback will be converted into capital gains. That is how it should be. That is how it is globally. After trying to plug the loophole, we have finally taken the corrective action. And let the promoters pay slightly higher tax. For corporate promoter, it is 22%. For non-corporate promoter, it is 30%. So that's a very welcome step. And I hope someday, even in capital gains, one can differentiate between promoter and non-promoter. Today, if I am a small and medium enterprises business and I sell my business, I pay full tax. But if you are promoter of a listed company and sell business, you pay capital gains taxation. So I just hope and pray someday, like in buyback, you have distinguished between investors and promoters. Similar thing could happen in capital gains also.
Hoping, Nilesh bhai, that not just God, but the finance minister listens to your prayers and something is done in the next budget. But having said that, one of the announcements that stood out to me, or rather the few announcements, had to do with the IT sector and the services sector, but specifically IT, and the push to try and get more data center business back to India. Do you think that this is the fillip that sector needed? And what, according to you, are the implications of it, at least in the near term?
So undoubtedly, better late than never. We allowed multinational companies to set up data center in Singapore, even though large part of their data was of Indians. Data is like oil. Would we have allowed multinational companies to take our oil without making payment over here? Answer is clearly no. But oil is visible and data is not visible. We allowed Indians' data to go abroad. Now we are taking corrective action. We are encouraging establishment of data centers in India. Rules and regulations are being simplified. Couple of joint ventures have also been announced. And I hope and pray Indian data stays in India. That is necessary from security point of view. That is also necessary from creating infrastructure through which we can share economies of scale benefit with the rest of the world. And finally, if data centers are here in India and there is access given to Indian companies to leverage that data, there will be many data analytics company coming up in India. So overall step in the right direction, better late than never.
All right, Nilesha, always a pleasure to take your commentary on and perspective on the markets, and especially your valuable comments coming in on STT hike as well as also buyback capital gains and the differentiation between promoter and non-promoter. Thank you so much for joining us right here on NDTV Profit. All right, with that, we will continue with the discussion and let's take it to the banking sector. Rajiv Anand, the Managing Director and CEO at IndusInd Bank, now joins us. Rajiv, amongst the few aspects which really impact your space is first the banking committee for Viksit Bharat. The second, a lot of emphasis on the bond and debt market and the support of funding and liquidity to MSME and micro enterprises coming in from the wholesale banking side. How do you view the budget and the factors which are going to really impact, especially with banking committee?
I can't hear you.
Okay, we'll get that going in a bit, Rajiv. We will just be fixing that and coming back to you on that. But the kind of differentiation that Nilesh guys made about the buyback, it was a very important differentiation that is as per the global standards, he said, of equity markets. So always the ongoing task has been to reach with the global standards. So that was an important point. But let's take it to some of the banking deliverables coming in from the budget. Rajiv Anand is back with us. Rajiv, can you hear me loud and clear?
I can hear you now. I can hear you now.
Great.
Thank you.
All right. So welcome to NDTV Profit. And a few of the aspects, the big one coming in for the banking sector is the banking committee for Viksit Bharat. Also a lot of support given to the bond market. And third, MSME as well as micro enterprises, given a lot of support from the wholesale banking point of view. How do you see this? So overall, how is banking sector going to get impacted with the budget, first of all, to begin with?
I think if you look at the budget arithmetic, it's very credible, 10% nominal, and so therefore no complaints about the budget arithmetic. Two is there's a greater focus on capex. That once again is very positive as we look to improve the quality of spends that we have and build for the future. Like you rightly said, there's a much bigger focus on MSMEs. One of the big issues that MSMEs have traditionally had is that their payments from particularly government entities slows down, but with the TRES platform now getting a much bigger impetus, that gets addressed as well. Capital is going to be provided to MSMEs, as banks like us who are looking to build out a large MSME portfolio. This just increases the bankable universe that is there for us. So to that extent, very, very positive. And I think I do believe also that because of the fact that this is a continuing growth-oriented budget, we should see a reasonably strong growth in the country into the foreseeable future, which by definition is good for banks as well. I think as far as the high-level committee itself is concerned, two big issues that I think are going to be deeply discussed. One is the whole issue around ownership, and second is this disconnect between ownership and voting rights. But I think you can already see how the regulator is thinking about this. We've seen two large transactions, the RBL Emirates Bank transaction and the Yes Bank SMBC transaction, and gives you some idea in terms of how the regulator is thinking about this. I think all in all, it's what one would, to use a cliche, a growth-oriented budget. Yes, of course, the markets are sulking a bit as a result of the STT increase, which I think is a bit unfortunate. But I think everything that is there in this budget will address the one other big issue that markets have been grappling with, which is growth at a micro level rather than at a macro level. I don't think anybody has an issue with Indian macro. I think that the issue that we've had so far is the percolation of that into micro, and I think some of the things that have been done in this budget will certainly help in that. The other big thing that's happened is addressing pain points. I mean, whether it is at a citizen level, whether it is at MSME level, exporters, and so on and so forth. I think we are certainly seeing a lot of work that's been done to ease the pain points for each of these sectors, and I think that certainly is very, very welcome.
Rajiv, that was interesting in terms of the macro picture of it. A pointed question when it comes to IndusInd. Now, one, we're talking about MSME and SME growth fund as well. 10,000 crores is what we're looking at that has been announced. IndusInd Bank, historically very strong when it comes to SME lending. How do you see that benefiting? And two, We're talking about the municipal bond issuance as well as the introduction of total return swaps that has come in for corporate bonds. Now, given your background in wholesale banking at Axis Bank, how do you plan to position IndusInd Bank's wholesale division as well in terms of benefiting from something like this?
I have already mentioned that one of the big growth engines for us, in addition to what we already have on the microfinance side as well as in the vehicle finance business, is the build out of a granular MSME business. And everything that I heard today is only fortifying that point of view that we have. There is going to be a lot more investment in terms of people and distribution and technology within this space as we go forward. Municipal bonds, I think we will have to wait and watch. This is, having spent many years in this market, I have seen multiple attempts at creating a muni bond market. So we will have to just wait and watch on how that plays out. But on the other side, the total return swap or TRS on corporate bonds, I think will only help deepen the corporate bond market, given the fact that we now have multiple players, pension funds, mutual funds, insurance, and banks in this market. I do believe that that is going to become an important tool, for all the market participants going forward.
Rajiv, appreciate that you've taken the time. Alex here, I would have loved to ask you a question myself, but we're short of time, and I will catch up with you very soon. Thank you so much for taking the time and speaking to us on Budget Day.
Thank you.
We have to slip into a very quick break. But on the other side, we will be speaking to Prashant Khemka. Do stay tuned.
The NDTV Golf Pro-Am, in partnership with PGTI, comes to you from the heart of South Mumbai at the historic Willingdon Sports Club. The city's classic layout provides the ideal canvas as India's finest golfers share the fairways with the country's top corporate leaders, Mumbai style. Watch at these heights.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Budget 2026, the growth agenda.
Welcome back to NDTV Profit's Union Budget 2026 coverage, which continues all day. We have Prashant Khemka, who's joining in now as well, who's the founder at Wycote Capital. Prashant, welcome to the show and always a pleasure to speak to you. This is Hiral on this side. What I want to ask you is, if on a scale of 10, if you have to rate this budget, where would it stand for you, number one, and your key highlight according to you?
Certainly, Hiral, it's a very difficult question, which for most people, there's a fairly straightforward answer, but I usually decline to answer this question because it is well above my pay grade to be grading Honorable Finance Minister's budget. So I would again very respectfully pass on this this task for now. What I would say is, look, like every budget, there are several puts and takes. I think fair to say, in my assessment, as I was listening, it seems like a budget that is a budget of continuity. I think we've seen over the last decade or more robust economic growth at about 6%. And a lot of positives have taken place. One can argue, obviously, we all ye dil mange more, and we all want it to be faster, the reforms to be faster, the growth to be faster, and whatnot. And what this budget has provided is stability or continuity of policy making without necessarily a major leap forward, which obviously that's something that one can hope for every time, but nonetheless continuing in the right direction. Now, that's at a very 50,000 feet level. But reality is a lot of real substance lies in the fine print. Yeah. Now I haven't had the time to go through the fine print, nor to discuss with any expert who's gone through the fine print. But let me take an example. What, to me, the single biggest problem that we as an economy need to solve is the relative ranking on ease of doing business. Yes, we made a lot of progress from, let's say, over the last decade till such time that such metrics were published. It showed that we jumped up from something like 142 to 60th or something, 62nd. But guess what? We don't remember who's the 60th fastest runner in the world, right? Sprinter in the world, or the 60th best tennis player. Now Australian Open is going on. So 60th best, is better than 142nd, but we need to continue to excel with the kind of purpose that we all Indians agree that we need to in cricket. In cricket, we all agree we need to be number one. Same kind of commitment has to be there in ease of doing business. And in this budget, it was very heartening to hear the finance minister mention during the speech. If you were to do a word count, I'm sure these words, ease of business and ease of living, were mentioned probably more frequently than many of the prior budgets that I can remember, and many comments were made along those lines. Now, these are comments which may not grab headlines, but in my view, these are what may provide collectively the basis for a greater ease of doing business and hence faster job creation and economic growth longer term. Let me just highlight one or two such comments. Like somewhere along, and I just was noting while the speech was going on, the words might not be precise, but early in the budget speech, Honorable FM mentioned that there will be a committee set up or something to that effect to review of rules governing non-debt instruments for foreign investors. Yeah. This is a subject that's attracts a vast amount of regulations, vast number of a maze of regulations in India. And if truly these are reviewed and unnecessary, regulations are done away with, which have outlived their use, right? That can be a big positive.
Certainly. So big positive, Prashant, and you hit the nail on the head. The question that a lot of people are asking, a lot of investors are asking, though, is the kind of drop that you're seeing today seems to be a knee-jerk reaction, particularly to that STT issue. And as you've pointed out, the devil is in the detail, fine print, etc. But the message is clear that this is a relatively growth-oriented budget. And so, assuming that the consumption push that took place last year pans out and heads into FY27 as well, does the investment thesis change at all? Are these dips buying opportunities, in your opinion?
See, first of all, we have to remember it's only 1% drop. Nowadays, 1% drop is no big deal in either direction.
Sure.
Second, in my view, STT is not the reason contributing for this 1% drop. It's an STT not on cash transactions. It's an STT on FNO. And in the overall scheme of things, in terms of pricing, while the percentage increase from where it was and where it is might seem very high, but anything that is so small, a minor change can also be big in percentage terms. I don't think that is impacting the market. I think there was some expectation in the market that had built over recent months. Now, we are not in a crisis situation in absolute terms, but when you think of how the global markets have done over the last 12 months, India has trailed by about 40 percentage points, in dollar terms, and maybe more in rupee terms. So for investors globally, it feels like India is in some form of crisis on a relative basis. Plus, the trade deal with all the politics around it and all the commentary around it, plus the geopolitics, wars going on here and there. India itself has, we are at our own Operation Sindoor. So there was some expectation building in that it could lead to an out of the ordinary budget, out of the regular budget.
Right. So, Prashant, we got your points. And of course, the market had a knee-jerk reaction. But in time, it's probably also digesting some bit of the STT hike and really, coming around with it. Thank you so much for joining us with your initial take on the union budget. Thank you so much for joining us on NDTV Profit. But remember that we have not taken cognizance of the market and how it's really shaping up. Sharad, our colleague, is standing by and also delving into all of that. Sharad, how has the market changed? What are the key highlights there?
Well, interestingly, everybody is reading the fine print of the budget right now, and there is a recovery, we could say that, from the day's low as well, and it is sustaining. It's not turning volatile. Remember, FIs will be getting into the action on Monday. We might see volatile moves then itself, maybe a gap down. But to put things much more in perspective, a lot of negative news is out now. Now, for a long-term investor, Parag bhai, what would be good to invest, a sector or a stock, anything in your mind?
So after today's budget, I will be more constructive on IT. Any decline in IT will be a good buying opportunity. because we might see somewhat rising bond yield tomorrow. Rupee might also correct a bit. So I think I would rather prefer IT or something like Industar, which has no connection with the domestic economy at all, and it is dependent on Vodafone Idea, where things are improving. So I would say that I would be more constructive on those kind of names from here on.
All right, so IT and telecom from your side.
Indus Tower.
Okay. Kush, two things. First is the important support levels for Nifty and your stock picks.
Sure, I think it's interesting to see that the markets are actually holding on to the key support levels, even though there was an intraday dip. So I think 24,800 is the immediate level. Once that is taken on the recent low, today's low, close to the 24,500 mark, that remains a support. 58,500 on the bank Nifty, and if that is broken, then 57,700. But I think these lows could well be held. We should, as you rightly said, wait for one more day. And from now on, I think, normal trading will resume. Probably give it one more day and normal trading will resume. So I would stick to stocks that we've discussed in the past. HDFC Bank, Kirloskar Pneumatics, MTAR Tech. These names will come back in action. So I stick to those names, starting tomorrow.
All right, sticking back to the names, sticking back to the long-term strategy, over to you guys.
Okay, thank you for that, Sharath, from the market pit. Ashish Kumar Chauhan, MD and CEO of NSE, now with us on the show. Mr. Chauhan, very good afternoon to you, and thank you for your time to NDTV Profit. We have so much to unpack with you. First of all, congratulations. The nod for the IPO has come, and a day after an increase in the STT. Is it thodi khushi, thodi gum, or is it all good?
No, for me, see, we have seen last 11 years a lot of increase in the options STT. This is a STT increase on futures more than the options in some ways. And it was expected also to the extent that there has been a lot of criticism of over speculation happening in Indian derivatives market. And that's where I think government probably had to show their displeasure by doing this. But broadly, it's a growing economy. We have seen the number of investors, even in last 11 years since Mr. Moody took over, has gone up 7.5, 8 times. Market capitalization has gone up also 7.5 times or so. And so overall, we see a lot of buoyancy, and even in future, this may continue.
What is the impact you expect of an increased STT on volumes already after the first set of restrictions on futures and options trading? We saw volumes slide about 30%, if I'm not mistaken. Do you see an even more impact on volumes after this slight increase in STT?
In the short run, of course, there will be volumes that will be affected. But what you have seen, the decrease in volume on NSE has reasons, because there were other measures taken by SEBI which brought down the volumes. Like Bank Nifty was taken out from the weekly into the monthly, and many other indexes were not allowed on a weekly basis. So this is not that radical going forward. So that's how I see that. It's basically something which government had to do by way of some sort of a action on tax side, which they have done.
Mr. Chauhan, this is Neeraj here. Good afternoon. Do you reckon that the overall volumes over the course of FY27, or let's say the next 2 or 3 years, would be made up for by higher participation? Because, as you said, like this is what, the 4th or the 5th time that the STT has been raised, or do you foresee an impact on the volumes in the near term?
Near term, certainly there will be some changes, because of the fact that many of the high frequency trading people would have to recalibrate their algorithms and other things, because all these numbers get input into their algorithms, and they have been running for the last 1 year. And so they will have to change that. But overall, in the long run, we don't see that kind of sort of a reduction staying there, because India has seen over the last 30 years, when NSE was set up, the number of trades per day, BSE was 10,000 trades a day. Today, on a good day, NSE does 30 crore trades, right? So it's a degree of difference, largely because of the larger number of people participating, but also the mobile phones and high-tech activities reaching into every hand. And that's where I think more and more people are participating in investments as well as some amount of hedging through derivatives.
Mr. Chauhan, I mean, this budget is not just about STT, and we would love to talk to you about the other things too, but I have one more question, if you allow me. As per my memory, FY25 revenue for NSE from FNO was a fairly large sum relative to some of the other participants as well. Do you foresee the incremental, or let's say if you were to look out of the next couple of years, do you reckon that because of all of these moves that are happening, that the derivative instruments-led revenue for NSE will come off as a proportion of your overall revenue in the next 24 months?
It remains to be seen. I don't think currently the numbers which have been increased are that large to have a long-term impact.
Okay, fair call. A word on the budget as well. We've towed the line of fiscal consolidation meaningfully. They have stayed to those red lines, but there's an increase in capex relative to the revised estimates for FY26. Overall, the focus seems to be back on capital expenditure and not as much on consumption as was the last budget. Would that be a fair assessment, and would that be the right thing to do according to you?
Broadly speaking, if you see, look back 25, 27 years, whenever BJP governments are there, they are very fiscally conservative. They tend to be hawks in many ways. And even Mr. Modi's 11 years or Mrs. Nirmala Sitharaman's 9 years of budget, you have seen they have been very, very conservative compared to not only the past Indian governments, but also the rest of the world. Today, if you look at America, their debt to GDP ratio is going to be 120%. Japan is about 200%. We are going towards from 55% to 54% next year, and then 50% in next 2-3 years. So it's a very different trajectory at which we seem to be moving. And it's also going to help you bring more investments because there is a predictability. It reduces inflation that comes out of shocks from the rest of the world. And so overall, I think their strategy has been always about being fiscally responsible. And I appreciate most of the money they spend now are on improving infrastructure, which is going to also help create more jobs, because once you have ports and airports and roads and electricity reaching out to every nook and corner, you're able to also create factories and other things in remotest areas, and that's basically with all the FTAs with EU and
we are seeing
Japan
Finance
and
Minister preparing to speak at the press conference. Before she starts speaking, very quickly, Mr. Chauhan, the nod has come. What is the timeline to your mind of the IPO? The mother of all IPOs, as it's being described.
It should happen probably 3 to 4 months for us to, 3 to 4 months for us to do the RHP and DRHP, and then 3 to 4 months more for SEBI to clear that. So probably 7 to 8 months is what I am expecting.
Happy Diwali.
Happy Diwali in advance. Okay, hopefully by then things will be better. I have to thank you, Mr. Chauhan. Let's listen in to Finance Minister Nirmala Sitharaman.
This is the customary press conference that we hold with all the secretaries. You've heard the entire budget being presented in the Parliament. So as opening remarks, I'll just highlight some of the points which we want to draw your attention to. But subsequently, of course, we'll answer all your questions. All the secretaries are here with me. So this budget being the first one, as the Honorable Prime Minister said 2 days ago, this being the first one for the second quarter of this century, also leading towards Vikasit Bharat 2047. We are laying the path and giving a push to the economy to maintain the growth momentum. And for that growth momentum or sustained economic growth, which we want to ensure, primarily we are looking at building the ecosystem with structural reforms which will go on. Reforms have been carried out. We are continuing to do the reform activities, so it will continue with an aim to make sure that we create enough environment for improving productivity and making sure employment is generated. Also, technology, 21st century, this century is completely driven by technology. So we will ensure that technology is brought in to benefit the common man, to make sure common man benefits in the sense of ease of doing living, or for his business to prosper, or for farmers for greater productivity, or better logistics, whatever. So technology for benefiting every common man. And above all, with all this, inclusive development. Sabka Saath, Sabka Vikas, and that is why you heard me bringing in schemes which have good allocations for bringing better health facilities, creating a cadre of people, not cadre in that sense, but a bulk of people who can come in as health workers, paramedics, and so on, and also making sure we are able to provide dignified opportunities for Divyangjan. Mental health has also received a lot of attention. So these are the side for Vikasit Bharat and making sure Sabka Vikas hoega. But the idea is the advantage and the momentum that we gained since after COVID by increasing public capital expenditure will continue. We've announced that 12.2 lakh crores are coming through public expenditure this time. It is 4.4% of the GDP. I'd like you all to please notice that, which is the highest, at least in the last 10 years. It could even be highest if you were to take data earlier. No increment in capital expenditure, sustained fashion, has happened ever before. This one marking 4.4% of the GDP. Then what are the kind of things which will happen through it? You will have dedicated freight corridors. I've named Dankuni in the east, Surat in the west. Then I've also highlighted that 20 new national waterways, not national highways, national waterways are being planned. And again there, those are going to pass through some of the critical mineral areas. Orissa, where the mineral-rich state, you have the waterways taking it to the port, and the two ports have been identified, Paradip and Dhamra. Similarly, we are also making sure that the coastal cargo movements will be enabled through a cargo route, so that through the coastal area we are able to cut down on cost of movement of goods. City economic regions, developing them is a very big new measure that we're coming up with. And for that, an allocation of 5,000 crore per city economic region. Imagine the amount, 5,000 crores in 5 years, 1,000 crore per year per city is being given, and the emphasis is going to be largely on tier 2, tier 3 cities. And then talking of infrastructure further, with the capital expenditure coming with the big number, you're having also the high-speed rail corridors, 7 of them announced. The destinations are clear, so that they become the bridge for all these economical robust centers. So those are for making sure that the infrastructure and the capital expenditure are getting tied up, and the country benefits from the ripple effects that these can bring in. The 7 strategic and frontier sectors in which we've highlighted that will increase productivity and also have new investments come in and give emphasis for India's own brand on those things is on the biopharma sector. I think that's going to be a big change in the way in which we are looking at giving capacity for those who are able to research, who are able to undertake research and development. So 10,000 crore initiative again over 5 years for domestic biologics and biosimilar production. This is a clear message and backed with enough substance that India's lead in the pharmaceutical sector should be kept intact, but at the same time bring in newer ways of helping the pharma sector, and also because it has an impact on human health. Semiconductor mission had 2 major announcements that will improve the India stack and also the IP related matters. Electronic components manufacturing scheme for 40,000 crores is a major encouragement for electronics to become self-sufficient. We have also announced establishing rare earth corridors so that India can face and be able to meet its own requirements with its materials. So once we identify and are able to explore these minerals and process them, make them available for us. Our dependency on external sources for bringing in the rare earths will be lesser, and we've identified the states where we want to establish this rare earth corridors. They are going to be in Orissa, Kerala, Andhra Pradesh, and Tamil Nadu. So these are very important developments, and they are going to have multiple decadal impact on the Indian economy. Our dependence on magnets and rare earths will be brought down. 3 dedicated chemical parks, again for reducing our import dependence. High-tech tool rooms for research, that will be set up in 2 locations. Very important thing is about the construction equipment being imported. That could be for building tunnels or metros or high energy and also heavy duty equipments, which we are relying on imports. We want to manufacture them in India. And that is why I said, how does it affect a common man? It affects because firefighters today have novel, new, big ticket and small, very small firefighting tools and weapons or equipments. We don't have them in this country. That's why if there is a fire accident in some very congested area, our equipments are not able to reach those points. Whereas there are equipments which today are produced abroad, which can navigate those small corridors and go save people's lives. Whether they or huge ones, all of which we want to make sure that we will have production in this country itself, whether they are tunnel boring or anything else. From small to big, we want to bring in those very impactful infrastructure into India. So we'll support domestic manufacturing. Then container manufacturing is another, which we'll support. I think I've gone in detail talking about the textile support in various forms. One very important announcement was made, Mahatma Gandhi Gram Swaraj initiative, which will make sure khadi, handloom, handicrafts will all be brought in, and one district, one product will all be brought in this initiative, and we'll be able to support rural artisans, rural workers, and handloom weavers in those areas. Legacy industrial corridors have got saturated. Manufacturing happening there is now very constricted because they are not able to bring in newer robotics and others. So we want to upgrade these legacy industrial clusters so that they become cost competitive and efficiency comes into these places. Even more important is the champion MSMEs, small and medium industries, entrepreneurs, MSMEs, who are going to be given all the support, and 3-pronged approach is being taken up there. We are giving equity support, we are giving also liquidity support, above all professional support for them, so that MSMEs, the equity support is supported by a 10,000 crore SME fund, growth fund. Above all, we are also topping up the Self-Reliant India Fund with 2,000 crores. So MSMEs should not feel any dearth of resources for equity. Similarly, they shouldn't feel any difficulty for liquidity in their hands, because the TREDS platform will now be treated almost as a backed up, security backed up instrument with which they'll be able to discount and get their monies. For professional support, we're working with the Chartered Accountant and Cost Accountant institutes so that they can create corporate mitras who can help these MSMEs in filing their returns, doing their accounts, and so on. Above all, for youth and training, there's so much. You've heard this speech, so I won't want to take your time on it. High-powered education to employment enterprise, standing committees being formed so that they can recommend measures for service sector as a core driver of Vikasit Bharat. Part B concentrated a lot on tax and related concessions that are being offered. More importantly is the process simplification which has been announced. So elaborate measures have been taken. You will be able to also seek clarification if you want. new export opportunities for fishermen who can go into the economic India's zones, high seas, and also assess and access the global markets. The one very touching, and I really was moved by this proposal, is where we have identified 17 drugs or medicines which are going to be basic custom duty exempt, which are important for cancer patients. Similarly, 7 more rare diseases are added to the import exemption list of the import duties. Baggage clearance and personal items which you bring in when you travel are all being given enhanced duty-free allowance. Besides that, there are quite a few direct tax and indirect tax proposals. Decriminalizing the penalty proceedings and support to the IT sector are some of the high points. As an opening remark, I'll conclude here. I'm sure you'll be able to ask questions and seek clarification. Thank you for coming.
Thank you, ma'am. I'll start the question, taking the questions. First question is 17.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that under the miscellaneous capital receipt, the provision is 80,000 crore rupees. And last year, the provision was 47,000 crore, which has been reduced to 37,000 crore rupees now. Does this mean that there will be more equity monetization this year, or there will be more focus on the asset monetization of CPSEs?
So you've got it rightly. The intent is that we will have a very strong asset monetization plan in place. Last year, ma'am had announced in the budget that there will be a pipeline prepared, which is being done. So we hope to reap the dividends from that.
238.
Ma'am, Timsi Jaipuria, this side from CNBC TV 18. I just wanted to know the rationale behind the hike in STT in futures and options.
So, first of all, I believe some confusion. In fact, the question that you have asked rightly reflects the announcement itself, that the only change made in STT is in the future and options. All the other STT rates remain the same. The primary objective of raising the tax rates on STT has been that it is felt that when you look at the volume of transactions in futures and options, whether you compare it to the size of GDP or size of the underlying securities market, it is largely in the realm of heavy speculation, which results in losses to small, retail, unsophisticated investors. And the government's intention is to discourage speculative tendencies, and the increase in rate is essentially in that direction. So it is meant to essentially handle the systemic risk in derivative markets. Even after this increase, however, the rates of STT will remain modest compared to the volume of the transactions that is happening there. This is the reason.
54.
मैम तरुण शर्मा फ्रॉम जी बिजनेस. मैम आपने पूरा बजट जो है वो न्यू एमर्जिंग सेक्टर पे बड़ा फोकस रखा है. मैम मेरा सवाल आपसे दो हैं यदि आप अलाउ करें. एक मैम आपने जो एक्साइज ड्यूटी का कैलकुलेशन किया है वो पिछले बजट एस्टिमेट से इस बजट एस्टिमेट में तकरीबन 22% की ग्रोथ देखने को मिली है. दूसरा मैम जो आपने MSME के लिए कहा कि जो ट्रांजैक्शंस होंगे उसके लिए आप एक्सचेंज प्लेटफॉर्म का यूज़ करना होगा, तो क्या मैम ये CPSEs के लिए कंपलसरी होगा जो डिस्काउंट ट्रेडिंग की जो बात है? थैंक यू.
I'll take the second question, ma'am. So, हाँ, ये CPSEs के लिए मैंडेटरी होगा कि डिस्काउंटिंग एज वेल एज नॉन डिस्काउंटेड बिल्स दोनों को ही ट्रेड्स पे करना होगा ताकि वो 45 दिन में भुगतान MSME को कर पाएँ, और ये हर तरह से चेक कर लिया गया है कि ये हो सकता है. सो वी वांट टू मेक CPSEs as pioneers. We hope, like ma'am has said in her speech also, that other corporates will also follow.
on excise.
Increased by 22%, sir, from last year B to this year.
Because there is from 1st of February, all the tobacco products have come back into excise, and all those revenues will account for the increase of the next year.
209.
Ma'am, Prakash Predashi from ET Now. The budget has announced restructuring of PFC and REC. What will this restructuring look like? And does this also mean that these NBFC will be merged going forward?
What is the later part of your question? That these NBFCs are not going to?
Merged going forward?
Yeah, I've said we are rationalizing it. You'll get to know as we go forward. We want to streamline it, and therefore we'll be taking some steps. We'll let you know the moment we decide how to go about it.
234.
Hello, ma'am. Harsh Kumar from Business Standard. Ma'am, two questions. One is, you said that a high-level committee will be formed on the banking reforms in order to 2047. Are we going further for any kind of merger or something, since government is continuously saying that we need at least 2 of the big banks, at least of the top 20 banks. So are we going towards that?
No, first of all, when I say that it's going to be a high-level committee which is going to look into it, the terms of reference will be prepared, and we are looking at committee to go into the entire expanse of the banking sector so that they come up with recommendations which help us to plan for banking for 2047. We need, by the time we become a Vikasit Bharat, 2047 is our goal. We need to understand what are the other steps that we need to take in the banking area, and based on the recommendations, we'll go forward. But we have the Secretary, Department of Financial Services. We'll ask him to also give us, please.
Ma'am, I think you have rightly responded. There are a large number of aspects relating to the banking requirement. For example, the credit to the GDP, commercial credit to the GDP ratio low, and the expansion of the banking network, and what kind of procedures currently we have that is impeding both the deposits as well as credit. All those aspects will be looked at by an expert panel, a committee, and well, we'll definitely have TOR, and then also consult the all the stakeholders, and the government will take a view on how to lay strong foundation for 2047 Viksit Bharat.
Ma'am, one more question.
229. Left side, yes.
Ma'am, Premangshu from Ananda Bazar Patrika. Ma'am, have you consciously avoided announcing any bonanza for the poll-bound states? And secondly, can you elaborate on this East Coast corridor, industrial corridor you announced?
See, the industrial corridors are very critical for supply chains. We need a predictable mineral, rare earth and magnet related products to be made available for India's manufacturing, whether it's lithium ion, whether it's automobile sector, whether it's the new age solar. You need these rare earths to be processed and be made available. We have enough raw materials. The coastal areas are rich in these minerals. And therefore, states also felt, I must credit that the interaction that I had with the finance ministers pre-budget, many states felt that there are rare earths which they can utilize. We then sat up in the budget group that we have, Revenue Secretary, DFL, Secretary DA, and thrashed out, talking with the states. What are the kind of things that we can do so that their capacities to extract these minerals, process them, make them something which the industry can benefit from. So India can be less dependent on imports of these materials. That is where, having spoken to states, we thought it's very important to recognize the corridor and give a policy for it so that industries can invest, private sector can come in, governments, state and center can come together on it. That is where these corridors were announced. And looking at the success of the defense corridor, I can confidently say these rare earth corridors will make that big a difference to the Indian economy. The first question, I think there's enough to cover all the election states. If I do, you will ask me, why have you done it only for the election states? Now I've done it for election and non-election states as well. You want me to spell out what has been done only for the election states? I'm quite happy to do it.
262, front. At the front, please. Here, front side. Front row.
Good afternoon, ma'am. Sapna Das here from CNBC TV 18. Two quick questions. Just wanted to understand the gross borrowing at over 17 lakh odd crore. Would the government look at it as being on the higher side? Just asking that. And within that also, if you look at your net tax revenue stream, of course, B to RE, it's higher. And a lot of concessions have been given away both on direct and indirect taxes. But the trend seems to be a bit flat, around 28 lakh odd crore. So if you could explain to us, how is this entire thing looking? And second, ma'am, in terms of the disinvestment aim, 80,000 crores, would this also include IDBI stake sale sometime in FY27, ma'am? Thank you very much.
So you've covered a number of secretaries all at one go. So on the borrowings, no, we don't think it's on the higher side because the net market borrowings are in the range of 11.73, which is been plus around that number for the last couple of years. The larger number is because we have 5.5 lakh crores which have to be repaid this year. So to that extent, we don't think that it's a large number. We have a plan how to manage this. And according to that plan, which also gets released from time to time, the markets would also know, as well as all of you all.
4. Okay.
So, on the tax stream, because of some concessions that were given this year, there has been some course correction. But if you look at the next year, the direct tax is growing at 11.4%. and continues to be 3.1% of the GDP. The total collection would be 6.9%. The indirect tax excise is growing very healthily because of the base correction, the base which has got added. Customs too is showing a decent buoyancy. So on the tax revenue, I think we are looking up. And even GST, as you would have seen the collection figures today, after rate rationalization, the buoyancy which we had expected, and in this hall we had discussed about it, you can see that coming back on that tax.
Hi, ma'am. Meghna Mittal from Money Control. The fiscal deficit target that you have set for next year from 4.4 to 4.3 is being seen as very, very gradual. Is there a specific reason, or is it because of the global uncertainties as one of the major factors for being such a gradual fiscal consolidation path?
I would have thought you'll appreciate it being gradual. Because particularly fiscal, drastic changes don't go down well. One or the other section gets hurt. We will have to be gradual, but yet keep it well within that band which gives confidence. And to show that we care for fiscal prudent management. There's no point in me dropping it to, let's say, 4. It has to be steady so that the economy goes in a steady speed. So it is a responsible number and realistic number. It's not as if I wanted it to be so gradual. It is a responsible number. We should achieve it and equally not bring in any kind of turbulence anywhere.
Okay, we'll keep showing you glimpses of that press conference and the Q&A session with Finance Minister Nirmala Sitharaman, but we must turn our attention back to markets. Just less than 15 minutes to go, or thereabouts to go, as markets close out for the day. And weakening again. Just pull up the Nifty. There you have it, nearly 500 points down on the Nifty. IT stocks are the only saving grace. The Bank Nifty actually even more worrisome, because the Bank Nifty has taken quite a dip as we've heard that press conference also go through. I want to pull up some of the losers, and it's no prizes for guessing that your capital market stocks are going to be hurting, but so are your defense pack. Bharat Dynamics, Garden Reach, not doing too well today at all. Bharat Dynamics, BDL and Garden Reach is what I'm talking about. Hindustan Copper, another 13% down, is the top loser. MCX has a double whammy, this whole commodity scare right now, as well as higher transaction costs coming in. Angel One is also hurting because of that. Data Patterns, which was doing okay in the first bit of the day, now has sunk in trade as well. What's working? A NetWeb, an Anant Raj, a Global Health. I would say all in all, Neeraj, is going to take a few days for the market to digest what's coming in. I don't even know if you're going to see a recovery tomorrow.
Yeah, Tamanna, and you know, much to the conversations that were happening when the market staged the bounce back or that the disappointment has been digested, I think the market is now showing that this is not the end of it. If anything, yes, tomorrow, day after might be more of the same as well, because there's no big positive and there are irritants out there, which is the problem. I think the other thing is also the elevated bond yields, and if the yields were to rise a bit more, then it also makes the Friday policy becoming very, very interesting, Tamanna. I think it's coming on the heels of this budget, which is not necessarily good for bonds as well, with the gross borrowing number, what it is. So
I don't know if there's room for doing much in the Friday policy, though.
No,
there just isn't. So, I mean, we have gone time and again looked to the RBI governor. The market has looked to the RBI governor to swoop in and save the day. This time, maybe not too much room. Vijay Kedia joining in, Ace Investor, to speak about the budget and more. Vijayji, what has been the first impression? And then when you saw the budget details, what was the second impression?
तो फर्स्ट वाज दिल के अरमा आंसुओं में बह गए, हम वफा करके भी तन्हा रह गए. दैट वाज द फर्स्ट इंप्रेशन. एंड सेकंड इंप्रेशन वाज दिस कि ठीक है जो है, हम होंगे कामयाब एक दिन.
एक दिन वो दिन कब आएगा, विजय जी? Do you think that this budget will be digested maybe by tomorrow, end of this week, या वो एक दिन थोड़ा दूर है?
नहीं, थोड़ा टाइम लगेगा मेरे को. आई डोंट थिंक दैट इज गोइंग टू रिकवर टुमारो, बिकॉज टुमारो ऑल दिस एंटायर वर्ल्ड विल आल्सो ओपन, एफआईज विल आल्सो कम, एंड आई डोंट थिंक देयर इज एनी सच क्लू और एनी सच थिंग इन दिस बजट व्हिच विल माने रेस्ट्रिक्ट देम टू सेल मोर. आई थिंक उनका भी सेलिंग अभी चालू ही रहने वाला है. इसमें ऐसा कुछ नहीं है कि जिनको वो लोग कोई बायर आ जाएंगे इसके अंदर में, तो उसका भी एक पेन मार्केट में रहेगा. सो ओवरऑल मेरे को लगता है ये थोड़ा सा, ये मार्केट अभी थोड़ा अंडर प्रेशर रहेगा. अब हो सकता है नया लो नहीं दिखाए जो लो दिखाया 3-4 मंथ्स बैक, लेकिन एक बार ये थोड़ा सा 1-2 दिन लगेगा इसको कंसोलिडेट होने में.
ओके, एंड विजय जी, द अदर एक दूसरा क्वेश्चन ये है कि इसमें से ऑप्टिमिज्म क्या है? सो अगर ये मार्केट नीचे जा रहा है, तो क्या सेक्टोरली या अर्निंग्स वाइज कुछ हुआ है जिसमें आपको लगता है और यू फील के this dip will give you the opportunity to look at those spaces, whether budget की वजह से or otherwise?
So I'll tell you, if let us not talk about the index and all, because index is not the right indicator also of the economy or of the market actually, so far market is concerned. So if you are talking about individual stocks, then I am in this camp that there are many mid cap and small caps which have fallen 50, 60, 70% from their peak, whatever peak they made in 2024 or 25, from their maybe 52-week peak or lifetime peak, जो भी उसके already corrected 50-60%. So I think there is opportunity in the market. As I always say that bull market is like sunshine, it is always there somewhere. So let us, if you are not discussing about the index and all, then I think there is opportunity in this small and mid cap, and mainly I feel that infrastructure stocks. Tomorrow we will read all these fine prints and in the paper and all. Government has focused on infrastructure. So मेरे को ऐसे लगे, and tourism also, that is also a part of infrastructure. So ultimately I was also have this fear that India mein employment is the biggest issue which should really be solved. I think government is ultimately working on that because of reviving tourism and infrastructure and all. So I think there is some opportunity in this market. It is not the entire market. Let the index fall wherever it falls to. But ultimately, you will find some good opportunity. And don't forget, euphoria converts into crisis, and crisis also gives us opportunity to go up.
आज कहाँ दिख रही है opportunity, विजय जी?
तो वही मैंने बताया कि मेरे को इंफ्रास्ट्रक्चर के जो स्टॉक्स हैं मेरे को वो अच्छे लगते हैं, जो इंफ्रा से रिलेटेड है, जो इंफ्रा में योगदान करते हैं, वो मेरे को वो शेयर्स मेरे को अच्छे लगते हैं, मेरे को लॉन्ग टर्म के लिए, नॉट फॉर एक 1 quarter or 2 quarters, for 5 years or 10 years.
Are you seeing attractive prices right now on your screen, even as market is reacting the way it is?
So again, as I said, that it depends. Where are you standing? What are you watching? आप किसको देख रहे हैं उस पर डिपेंड करता है. तो इस बोल के वो डिपेंड करता है. जैसे इंफ्रा के शेयर्स में आज कोई विशेष ऐसा कुछ नहीं हुआ जिस तरह से मार्केट गिरा, उसमें कोई ज्यादा, और गिर भी जाएगा तो दैट इज नॉट एन इशू. एक दिन अगर गिर भी जाएगा उससे क्या फर्क पड़ने वाला है उसको. गवर्नमेंट की पॉलिसी जिधर किधर फोकस करती है उस पर ध्यान देना चाहिए. इतने बड़े मार्केट में अगर वो कम गिर रहे हैं तो दैट इज आउट परफॉर्म कर रहे हैं. सिंपल अगर गणित, अगर मैथमेटिक्स अगर समझे मार्केट का जो हम समझते हैं उसमें, तो ये लॉन्ग टर्म स्टोरी है. एक दिन में कुछ नहीं होने वाला है इसके अंदर.
हम आपके गाने का वेट करें, अभी कंपोज हो रहा है या आज अभी आप सुनाएंगे?
अभी तो आवाज ही नहीं निकल रही है. अभी तो किधर से अभी वो गाना गाएगा. अभी तो अभी थोड़ा सा रिकवर होने दीजिए. अभी रात को थोड़ा सा 7 PM 8 PM अपने पहले तो उसके बाद में फिर 2-3 दिन बाद फिर गाना, फिर हम होंगे कामयाब एक दिन. क्या है?
Okay, so some recovery time required. Thank you so much, Vijay Kedia ji, for speaking with us. The ACE investor there talking about, I think that's a bit of the market sentiment right now. You're seeing that on the screen, unfortunately. Radhika Gupta, MD and CEO at Edelweiss Mutual Fund, joining in now. Ms. Gupta, thank you so much for your time. I mean, apart from the STT pain, what was the big highlight for you?
Look, I think it's a budget split in two halves. Half one, I think, was in line with expectations, and I say that in a pretty good way. You continued your path of fiscal prudence, so I think 4.3 is a good number on the deficit. The capex number was, at least from a growth point of view, was better than expected. I think there were a lot of good noises around two areas that are of keen interest to me. One is manufacturing. So whether it is semiconductors, whether it is electronic manufacturing, I think there was a big thrust on manufacturing. And, like Vijay, I've been talking about the importance of jobs in India for a long time. So the idea of job creation, job-linked incentivization through different sectors, creative ways, whether it's content creation, health, etc. So I think all of that was actually very good. And there was nothing detrimental from a direct tax point of view or a capital gains tax point of view. On the other side, of course, you had, as you said, completely out of the blue STT, which I think has surprised markets and frankly will take a little bit of time to digest. So I think 90% good until this little STT thing came as a bit of a prickler.
Okay. Shankar Sharma of GQuant as well with us. Shankar, I see that you are in a camp which is saying that this budget is positive, or is it that it is positive for one reason which you like, which is that the STT has been hiked and it's maybe beneficial to get investors into the camp, but otherwise it's not, because the market verdict isn't the most optimistic right now?
That's okay. I don't care about the market. I care more about long-term health of the Indian youth. If anybody has any interest in that, at least I am, because they are the foundational basis on which we can grow. If they are out there speculating on F1, it's a completely useless economic activity. It is nothing but gambling. It's an addiction, like as bad as cocaine. There are people who are addicted. I know people at the smallest strata of society, an Uber driver or a television repair person, all of them are sitting and doing nothing useful with their lives, saying they're driving a cab, but they're actually speculating in FNO. That has to stop, but they cannot be stopped because this ogre has become too big, so at least you can put brakes on it. I think this is a fantastic move. They should keep increasing it till the point at which you kill the derivative market in the way it exists right now. It's a professionals game. Let professionals do this. Please, this retail boom in which brokers have got 10,000 crore cash piles coming out of the losses incurred by retail investors. That kind of rubbish has to stop. Enough is enough.
Shankar, okay, the counter to that would be in a maturing free and fair market, there should be an opportunity for everyone. Should we come and nanny a certain section of investors saying, no, you're too dumb to do this?
Yes, exactly. There are times when you have to tell your children that you're an idiot, you cannot do this. Don't you do that as a mother and a father? You do that all the time.
But these are citizens of the country, these are adults.
Look, just because you're 21 or 25 doesn't make you an adult in every way. It's only a technicality that you're an adult. You need to have regulations in place in order for society to progress. Just because you want everything to be free doesn't mean you can do crazy stuff. This is borderline insanity. How can you keep allowing this? I've said this not today. I've said this when this whole boom started 5 years ago. This is going to spell the doom of Indian youth. I've said that the entry criteria must be so stiff that none but the very few can make it. But it became a widespread cancer. It has metastasized completely. It has to stop. Who can argue against it? The equity markets are where capital formation happened. What capital formation has happened in F&O? Explain this to me. Has it improved your cash volume? No. In fact, I have written an article saying that our cash volumes as a percentage of market cap are lower today by a factor of 2 or 3 as compared to 25 years ago. Okay, now, on the other hand, you have big losses being transferred from retail investors into the pockets of brokers, and somewhat of it goes to the government. Then you have the profits being transferred to FPIs and FIIs, all free of tax. What rubbish is this? The country loses foreign exchange. The country mortgages future of the youth. For what benefit to society? Come on, don't tell me the gambling is good for the future of India. Just because it's supposed to be, we have to be very free market and let kids go and gamble. This is ridiculous. I think she's done a fabulous job on this front. And by the way, they have not hiked it as far as I know on the cash markets. So the direction is also very good.
It's on the futures and options side. Okay, but 2474. Yeah, perfect. Shankar, just stay on. We'll just wrap up. Radhika, one more question to you. Then just take in a couple of questions with our guests as well. Markets coming to a close. But Radhika, beyond this STT, and you started off saying that that's one from a markets perspective, maybe quote unquote an irritant, not in your words, but otherwise. But that's something that the market seems to have thought. Maybe the borrowing number is a bit thing. Anything else that stood out for you in the budget, Radhika, very quickly?
So I think the borrowing number did stand out, and I think one question that will come is how will you have demand given all this borrowing? I think the economic survey highlighted the struggles in the corporate bond market. I was frankly expecting a little bit of help on taxation because reality is nothing has happened in the debt segment in the last few years, and asset allocation decisions are now being made because of taxation. The one good thing that did come in though is at least there was a recognition that we need to have derivatives, we need to have market making in the corporate bond market. So I think, the execution of that, we'll see how that happens. But I think that could be a positive for the derivatives, for the debt market. So that came as a, pleasant surprise.
Okay, we just have a couple of minutes to the closing. That's why I want to quickly get in Kush Bora on do you see any sign of a recovery, Kush? We're just getting deeper into the red as we head to that closing bell. 2.5%, maybe 2.25% down right now on the Nifty. The bank Nifty looking like it's in pain. The Nifty IT, the only spot of green there.
I mean, it's the second wave of selling that came about and which has taken us to 24,750 levels. That's the cause of worry. Had we held above 25,000 or even 24,800 on a closing basis, I would have said that this was a knee-jerk reaction. In perhaps a couple of weeks' time, this will end up being a knee-jerk reaction, to the budget.
No, but knee-jerk jaldi hota hai, not 2 weeks later.
ऐसे नहीं है ना कि आज क्या हो जाएगा, कल FII आएंगे, वो भी बेचेंगे. In all probability बेचेंगे. So there is a probability that we might see a continuation of that. So इसीलिए आज मैं ना BTST ना STBT suggest कर रहा हूँ. 1-2 दिन रुक जाओ. If and when this dust settles, this will be a good opportunity to buy. Sectors बाद में देखेंगे. Stock specific action तो काफी रहेगा. But हाँ, don't be adventurous. Don't go out and buy just today. Give it at least a day more, if not a couple of days.
You're seeing another day of pain, Parag bhai?
Yeah, so tomorrow definitely it will get down because bond markets and forex markets are closed today. So they'll react tomorrow, right? Bond yields will go up because 17 lakh crore gross borrowing number.
Higher than expected.
And definitely nothing done to attract more dollars also. So I think rupee will also depreciate. So I think what I have been doing in the portfolio today is selling some of the domestic cyclicals and buying IT. When markets fell, I bought into IT and something like Indus Tower, which is not connected with any cyclicality. It is just connected with Vodafone Idea. And
just a quick point on that. देखिए ये सारा न्यूज़ आज डाइजेस्ट हो जाएगा. कल अगर गैप डाउन होता है तो हो सकता है कि वो एक लो बन जाए. सो ऐसा नहीं कि कल पूरा दिन हम शायद नीचे ही रहेंगे. मे बी इट कुड बी द इनिशियल 30-minute रिएक्शन. Hence, don't buy today. We'll see how it goes tomorrow. But yeah, there's every possibility that we might rebound tomorrow.
So my view is that rupee depreciates.
We're going to start
rupee depreciates further.
Then companies like Infosys, Techem, you should start buying gradually on dips. So tomorrow dip should be bought. I think.
Yes.
Then IT becomes a new sector in my view after this budget to bet on.
IT becomes, okay, the markets have closed. Let's just quickly take you through what's happened there. The Nifty closing a little over 2% in the red, 553 points. The Sensex also not looking pretty. It's been a tough day for the markets. That big dip that you're seeing on that intraday chart is when the STT was first announced, some recovery and then sliding once more. The Bank Nifty also 2% down in the red, mid-cap 100, 2.5% down. There is really not too much respite. The advanced decline ratio is showing you the extent of pain. I'm going to pull up the Nifty heat map if I can and just take a look at what are the pain points there. Do you have any green? Oh, you have a fair bit of green, more than I expected on the Nifty, and it's pretty much IT. IT could be the continuing trend tomorrow as well. Wipro, TCS, Infosys, all in the green. Sun Pharma holding out because of its result. Max Health doing okay, as is Cipla. There is some push for pharmaceuticals and healthcare. Look at Bharat Electronics, 6% down. That is broken dreams, or I would say high expectations that is playing out there more than anything else.
So when I look at Reliance, 3.8% lower for the big boy, and single largest pressure point, I would reckon, on the points table on the Nifty.
I wonder if the announcement this morning, unilateral announcement this morning by Trump saying that India will now be importing from Venezuela, if that is going to be playing out in the next couple of days. Something
could be interesting. Could be interesting. Actually, maybe take it back to our guests. And Shankar, beyond the budget, I think the commodity route that we saw over the last couple of days, plus this whole geopolitical piece, Donald Trump saying India will buy Venezuelan oil, lots happening there. What sense do you make of what's happening in commodities currently? Gold, silver, base metals, etc.
No, I'm bullish base metals, I'm bullish commodities. Look, you will see these kinds of cuts once in a while. I think that happened also a few months ago. Copper also, I think, fell like, 20% in a day or so, I think 6 or 8 months ago. These things happen in a trending bull market. You have very sharp sell-offs, but I think that trade is, at least as far as I can see, very, very structural. I've been bullish on all these publicly and privately for the last 12, 18 months. I see no reason to change my view on that. And I see no reason to change my view on India either. With or without this budget, I've been, basically negative on India. And I've again said this publicly 2 years ago that you will not see much returns from the headline indexes. The individual stocks will, of course, follow a different trajectory. But broadly speaking, from the big boys, on the big index constituents or the index itself, you are unlikely to see positive returns. So far, 2 years on, that thesis seems to be working out okay, because in rupee terms, while we have fallen maybe, 7-8%, something like that after today's fall. Dollar terms is where the real action is. We're probably down, I think, close to 20%, because the dollar rupee itself is now, 10% off. That's where the real pain is. The broad market is down 30-40% on the average, the median stock. So the pain is really speaking on the currency front and the broad market. And that has played out as per at least my assessment. Again, one thing I did not pick up during the course of the budget was how the revenue numbers for the current year have panned out. I don't know whether you picked it up or not, because my view last year was that the revenue numbers would disappoint. I think they were factoring 14% growth in personal direct taxes. I think, as far as I know or I remember, the last data point was the 3.5% minus year to date, whenever the last data came out. I don't know what you picked up in that, because I was in the middle of interviews and everything. I didn't pick up a lot of that. But I'm sure there is going to be slippage, in that for the current year. Next year, again, looks very, very dicey for capital gains, short-term or long-term. STT volumes with this, again, will take a hit. Overall, for the budget, the fiscal constraint will be actually very accentuated in the coming year as well, which is why the fiscal deficit has overshot. I mean, I was really surprised, to be honest with you. I believed that this government would hold the 4.2% line, but clearly there has been a slippage there. Also remember, it's also because the nominal GDP growth has come in a lot lower than what the original estimate for the budget was. I think it was north of 10%, but we are tracking right now only about some 8.8 or 9%. All of that affects the fiscal deficit because the GDP itself becomes a denominator on which you calculate this fiscal deficit percentage. So if your number of the growth itself is lower, then your fiscal deficit as a percentage goes up higher. I think that's also part of the fiscal math, which is a problem. So yeah, I'm sorry to sound like this, Neeraj and Tamanna, but I mean, this is what it is.
No, we have to say it how it is. And, that's the thing. The screen shows what people are thinking, whether they say it or not. It's
exactly.
It's on the screen.
We can all be Hindi chini bhai bhai, but ultimately there is a referee out there telling us, man, you've lost the game, at least as far as today.
The screen talks, at least for now. Maybe the longer term aspects will be seen over time. Shankar, thank you so much for joining in. Always fun chatting with you, Shankar Sharma there. Speaking now with Dinesh Khara, former chairperson at State Bank of India and someone who looks at the budget math astutely. Mr. Khara, thank you so much for your time. If you keep some of the bits on capital markets and STT and all of that away, and we've been talking markets throughout, but let's zoom out and see the bigger picture. This was an opportunity for India to lay out her vision on what we are going to do in turbulent times. Do you think we've succeeded in giving a glimpse of that?
Yeah, I think I would say that as far as the current economic scenario is concerned, which is more influenced in terms of what the global headwinds are. So I think considering that it was quite a challenge to ensure that we ensure our fiscal deficit remains where what we want it to be. I think considering that and also the kind of impact which the global headwinds have on our export sector, it was actually giving huge challenge in terms of employment opportunities, particularly in the textile sector, shrimp, and also jewelry sector also. So I think the kind of steps which have been taken, they are essentially in terms of strengthening the structure of the economy in terms of dealing with the capacity building, supporting the SME sector, and also giving fillip to the biocon and as well as to the new industry, which is essentially in terms of when we call it EV and the batteries, etc., the solar, etc. So I think the kind of focus which has been brought in the SME sector in terms of the cluster developments, in terms of the receivable financing, in terms of liquidity management for the SMEs, that is, I think, these are quite credible initiatives which have been taken. Apart from that, a guarantee structure for infrastructure development also, and on the top of it, the kind of focus which has been brought in terms of bringing in the inland waterways, and also I think this is something. These are the steps which will go a long way. And I think apart from that, when it comes to the rural economy also, the kind of focus which has been brought into the high value crops across the country. And I think, again, there's something which is quite credible. I would say that the budget has attempted many structural reforms, which will probably yield the results in the days to come. Also, when it comes to the urban challenges and also encouraging newer cities to come in.
Agree.
Again, from the corporate.
Sir, sorry, if I can, because your input would be very important here. A large portion of the respondents today believe that yields will open higher today, that rupee may depreciate a bit tomorrow rather, yields will open higher tomorrow, and there isn't any near-term reason for the elevated yields to come off as well. Even the RBI won't be able to do much. What do you think is the near-term trajectory for the bond markets?
Yeah, I think the bond market, of course, initially would be acting on the sentiments, and those sentiments might actually influence the yield movement tomorrow. But I think actual movement of yield will depend upon the borrowing program, borrowing schedule which will be announced. So I think if at all the borrowing happens towards the fag end of the next financial year, then perhaps it may not impact so much. But yes, of course, having said that, I must also acknowledge that bond traders do get influence in terms of the sentiments, and that will be something which will prevail in the near term.
Okay, thank you so much, Mr. Khara, for speaking with us today. Tomorrow's another day. We'll also wait to see what the rupee does when we open for trade once again tomorrow. We'll take a very short break. But on the other side, our conversations stay on. Sunita Reddy, the Managing Director of Apollo Hospitals, joining us after the break.
Budget 2026, the growth agenda.
The NDTV Golf Pro-Am, in partnership with PGTI, comes to you from the heart of South Mumbai at the historic Willingdon Sports Club. The city's classic layout provides the ideal canvas as India's finest golfers share the fairways with the country's top corporate leaders. Mumbai Star.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म है। बचपन से पता था मेरे सपनों में दम है। आगे नहीं, सबसे आगे जाना है। स्टार नहीं, सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम। क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme Budget 2026, the growth agenda.
All right, we continue our coverage of the budget and talking to corporate leaders. In lieu of that, Ms. Sunita Reddy, the Managing Director of Apollo Hospitals, joins in right now with her thoughts on the budget. Ms. Reddy, great having you. Thanks for joining in. This is Neeraj here. And while we'll talk about While we'll talk about healthcare, but first, as one of the doyens of India Inc., do you think enough was done in this budget to incentivize either capex or corporate confidence for the next 12 months, or the budget may not necessarily have been the platform to do that?
No, I think that corporate confidence, for sure, it is inspired, because if you look at the focus on healthcare, and if you look at the macro fundamentals of India, which is really growth at 7%, fiscal deficit coming down to 4.3, I'm sure that corporate India is very happy that they've inherited a very healthy balance sheet, which should attract further investment, and reforms done earlier, which has spurred consumption. So clearly we are on the growth trajectory. I think what this budget did was to look beyond just strengthening Atmanirbhar India, but focusing on really on Vikshit Bharat, which is a country that is relevant to the rest of the world. And that came through even in healthcare.
I think healthcare, for one, Dr. Reddy and Tamanna here, healthcare for one is something that we can all agree on there was enough focus on, maybe more than was being expected, whether it is on biopharmaceuticals, whether it is on reducing duties on cancer drugs, etc. That is something where you think the push was clear from the government?
Yes, I think so. I think the important part of that is to first is to recognize that we have that we build the next generation of intellectual property, whether it is in the pharmaceutical space or in the healthcare delivery space. And that comes through with the network of 1,000 clinical trials, the manufacturing of biosimilars. It also comes through in the way they have envisioned the ecosystem around healthcare, a commitment of 1 lakh crores, and also to train 1 lakh allied professionals. So the whole ecosystem is considered. And while doing so, a recognition of NCDs, because they contribute to 70% of India, is really significant, because she's also focused on mental health, geriatric, and setting up emergency centers, while lowering the duty on 37 cancer drugs. So I think it is good for healthcare, it's good for every Indian.
Just one more point, and this is now I'm going to increase the scope of our conversation to what is happening geopolitically as well. We're not sure whether there are going to be tariffs tomorrow, even on pharmaceuticals coming in from the United States, or some new turbulence which is coming in. Do you think enough done to protect export-oriented businesses, including pharmaceuticals?
The EU treaty will have significant impact and probably shelter us from anything that could come to the US. I've always maintained that if you look at the EU and UK together, it is equal to America, to the US. And I think that we will find a way to more than compensate for this. If you looked at, the budget today, she said 10% of global GDP will come from services. And I think this is where India excels. So besides pharmaceutical exports, I think we will more than make up for it by exporting services, because the finance minister did talk about 10% of global services coming from India.
Okay, thank you so much, ma'am, for speaking with us. Sunita Reddy of Apollo Hospitals there, talking on the budget, not just from a pharmaceutical industry perspective, but also as a really crucial voice in India Inc. We've been talking about the big, I would say, dampener of spirits for the markets, which is the STT. And just look at this clarification that the government has put out. Now, why this is important is because of what they are saying. The government now says that the transactions in futures and options is more than 500 times of GDP. This is their clarification of why these taxes have increased. We should actually put out that line. They say in rupee terms, our GDP is 300 lakh crore and volumes for options and futures is more than 1.5 lakh crore. There is justification for increase in rates to curb purely speculative activity in options and futures. Other STT rates remain the same. My only point is, does this not indicate, Parag Thakkar, I'm going to come to you on this, does this not indicate that this is not the end of what they will do to curb this activity? They're defining it as speculative activity.
Yeah, so the intention is there. And I think whatever happened due to the Jane Street episode and all that, and that actually, brought all these facts out. Of course, we all knew as a market participants, but that retail investors and, as Shankar Sharma was saying, youth is losing money to these institutions who have mastered this art. Right? So in order to avoid those losses, I think the government has taken this route, and so we'll have to accept it and market will have to digest it. But I would say that, so that is why I'm saying that, markets can be volatile, and one of the big thing which I feel that which has happened is this was a good opportunity to attract a consistent flow of dollars into the country, which unfortunately will not happen until the trade deal happens with US. And that is why rupee will further depreciate and bond yields might go up, as Mr. Dinesh Khara also said that in the immediate future, bond yields can go up because gross borrowing is higher. And that is why IT is a good safety net which will relatively outperform, and which was seen today also, especially names like Infosys, TechM and LTM entry.
Okay. Well, Christian de Guzman, Senior Vice President of Moody's Ratings, with us on the show as well. And I appreciate you taking the time out and joining us, Christian. What do you make of this steadfasted resolve of the Indian Finance Minister to toe the line of fiscal consolidation and continue on that path, even on the debt to GDP ratio number as well for FY27, the budgeted estimate is lower and moving towards the targeted number given of FY31. What do you make of that to start off with this conversation?
Great. Well, thanks for having me. Well, I think the communication is quite clear in terms of the demonstration of that commitment to long-term fiscal sustainability. So yes, indeed, the government has been successful in achieving that 4.5% of GDP deficit target this year, and actually beating that by 0.1 percentage points. But however, I think what we would want to highlight is that pace of fiscal consolidation has slowed considerably. That 0.1 percentage point of GDP improvement in 26-27 is slower than any of the sort of declines in the deficit to GDP figure that we've seen since India emerged from the pandemic. And as a result, I think what we can say is that the path of gradual debt reduction is going to be quite gradual. So put it another way, we think that the debt burden of India is going to remain elevated for quite some time, notwithstanding, again, the government's continued demonstration of fiscal prudence.
Christian, you say that India's budget was tactical but not a breakthrough and does not merit a sovereign re-rating. Explain why you say it's tactical but not a breakthrough.
Well, I say it's tactical because there weren't any very large, sort of groundbreaking types of measures. What you saw here are a series of measures, many of them, related to very specific sectoral specific types of things, as well as certain, projects related to infrastructure, such as improving connectivity. But, there aren't any very large, sort of headline grabbing types of measures that perhaps we've seen. We don't think that this progress on fiscal consolidation warrants a rethinking of our sovereign credit assessment at this time, because as I had mentioned, don't just look at debt to GDP. The other part of our fiscal strength assessment includes debt affordability. One measure of that is interest payments to revenue. And so what you can also see in the released figures, in those released projections, is that revenue to GDP, excluding borrowings, is actually eroding. And that reflects a series of measures that had already been announced prior to the budget, such as the GST rationalization. a few weeks back. And so that does reflect the reason why I think there is this tactical nature. The revenue take is actually smaller, so therefore the room for maneuver to support the economy is also smaller. So in fact, I think just broadly speaking, if I could summarize, the deficits will remain wide. It's actually continues to be wider than any of the deficits recorded prior to COVID. The debt will remain high as well, and debt affordability is actually going to worsen a little bit over the next couple of years.
Okay, thank you so much, Christian de Guzman, Senior Vice President at Moody's Ratings there. So I think a safe move at this point, keeping all the macro indicators in view. But it's time for a very short break, and what a marathon day it has been, Neeraj. I think all in all, it's been a swirl of emotions for the markets as well, if you look at what the charts showed at the end of it.
Yes, indeed. But, just a bit of a pat in the back to this fantastic team which pulled Budget 2026 together here at NDTV Profit, your budget headquarters. And thanks to all viewers, digital and television, for joining in thus far. But lots of exciting programming lined up for the rest of the day as well, Tamanna.
Absolutely. And before we get into that break, take a look at the key highlights of what the Finance Minister said today.
I present the budget for the year 2026-2027. This is the first budget prepared in Kartavya Bhavan. Public capital expenditure to increase it to 12.2 lakh crores. The STT on futures to 0.05% from the present 0.02%. The fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. We will develop 7 high-speed rail corridors, basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035. With this, I commend the budget to this August House. Jai Hind.
The NDTV Golf Pro-Am, in partnership with PGTI, comes to you from the heart of South Mumbai at the historic Willingdon Sports. Finest golfers share the fairways with the country's top corporate leaders. Mumbai style. Watch at these times.
Your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India. Decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गॉन।
In her 9th budget, Finance Minister Nirmala Sitharaman announced a significant push to public investment, raising capital expenditure to 12.2 lakh crore rupees, while maintaining a firm focus on fiscal prudence, pegs the fiscal deficit for FY27 at 4.3% of the GDP. Key sectors set to benefit from higher outlays and also targeted tax concessions include biopharma, semiconductors, nuclear energy, data centers, and tourism. Government increases securities transaction tax on futures and options, spoiling the mood of the Lal Street, pushing Nifty to its biggest budget day fall since 2020 budget. A big boost for rare earths. The government will set up dedicated corridors across Tamil Nadu, Kerala, Odisha, and Andhra Pradesh to scale up domestic mining, processing, research, and permanent magnet manufacturing. A strong push for MSMEs. The government announces 10,000 crore rupees incentive package, topped up by an additional 2,000 crore rupees under the Self-Reliant India Fund, duty cuts, and an aggressive export push aimed to shield India from Trump's tariff heat. Finance Minister Nirmala Sitharaman says that focus remains on maintaining the growth momentum with structural reforms to boost productivity and drive employment.
Budget 2026, the growth agenda.
Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Nisha Poddar. Now, along the next half an hour, we'll bring you the latest on markets as well as national and international news. All the top key headlines coming in from the Union Budget of 2026. Action over ambivalence, reforms over rhetoric, and people over populism. That's the word and the tone coming in from Finance Minister Nirmala Sitharaman, set at the beginning of her budget speech for FY27. First up, the announcement that shocked the markets today. The government has proposed to hike the STT, or the Securities Transaction Tax, on futures and options, while STT on futures was increased by 150%. Options will be taxed 50% higher than the current rate. The second one, which is an important one, in a fresh boost for the small enterprises, the government has proposed to introduce a growth fund worth 10,000 crore rupees. Now, this scheme is aimed at reviving the 200 legacy industry clusters. Additionally, a 2,000 crore rupees top-up under Self-Reliant India Fund is proposed to support the micro enterprises. The two of the key sectors that also received a significant outlay were semiconductor mission as well as rare earths. So these were some of the important key highlights. In fact, the finance minister has proposed to establish dedicated rare earth corridors in Odisha, Andhra Pradesh, Tamil Nadu, and Kerala to reduce India's dependence on exports further. It will also hike the outlay for semiconductor mission to 40,000 crore rupees. And finally, in an attempt to boost tourism, the Finance Ministry has proposed to create tourism destinations in 5 of the Purvodaya or eastern states of the country. 6 Buddhist circuits will be formed in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram and Tripura. Let's bring you the highlights of the Finance Minister's budget speech right here.
I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover.
All right, so those were the key highlights coming in from Finance Minister Nirmala Sitharaman's budget speech of Union Budget 2026. Now, commenting on the Union Budget, Prime Minister Narendra Modi also underscored the impetus it provides to sunrise sectors, from really building rare earth corridors to a renewed push to secure the biopharmaceutical industry. Now, the Prime Minister said that this budget elevates the speed of Viksit Bharat, bringing India one step closer to its developed vision. Let's listen in to a brief snippet from his address today.
इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमईज तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है।
All right, there you go. Prime Minister Narendra Modi calling the Union Budget very futuristic in the growth agenda of India. Let's take it across to our strong highlight coming in from the editorial bandwidth that we have in the newsroom for deeper insights on Budget 2026. Joining us is Alex Matthew, our senior editor. The budget introduces several changes for the individual spanning taxation, overseas spending as well as investments. So Alex, connect the dots for us and walk us through what really these changes mean for you and me.
The key takeaways for individuals from Budget 2026. First of all, no big bang announcements. Of course, last year you saw the major overhaul of the income tax regime, and so therefore there wasn't expected to be a big bang announcement. But there are still a few changes that you should watch out for. First, if you're trading in derivatives, then the securities transaction tax across the board has actually gone up. And that's something that you should bear in mind. The second, quite an important update if you are looking to purchase sovereign gold bonds from the secondary market. From the 1st of April onwards, you will no longer get the benefit of SGBs in the secondary market, and there are no fresh issuances of SGBs taking place, so that's a negative for you. And of course, with the way that gold has risen, it doesn't make any sense for you to sell those bonds in the secondary market anyway. The third has to do with the treatment of share buybacks. They will now be treated as capital gains as opposed to the earlier treatment of similar to dividends, where it would be taxed at the slab rate. There are a couple of changes related to the tax collected at source. One, if you are buying foreign tours and travels, then that tax collected at source has been reduced to 2% from 5% and 20% earlier. And the tax collected at source for remittances for the purposes of education and medical purposes has been reduced to 2% from 5% earlier. There is also a complete exemption on customs duty on 17 drugs that are used to treat cancer, and this is looked at a positive for all individuals. And finally, there is a window that has been provided, 6-month window for you to disclose any foreign assets and income that you might not have previously disclosed. So this is a window for you to meet with regulatory guidelines. And there are also a few changes related to the filing of your income tax returns, revised filings, etc. There is now a larger window for you to do that, and you can also file a revised filing after reassessment is done. But make sure that you check with your chartered accountant to ensure that you're following the right rules. Those are the broad takeaways from the perspective of the individual.
All right, thank you so much, Alex, for giving us perspective on the taxation aspect. But one focus sector has been the defense sector. Whole of last year, it was one of the most watched out for sectors. What is in store for defense sector in the budget? Hiral, our colleague, tells us. Tell us, Hiral.
You know, defense as a sector has been beaten down in 2025. In fact, the kind of gyrations that we've seen at the start of 2026, the expectation was there could be some announcement that could be coming in. And now you're talking about an outlay or allocation which has gone up by almost 15% at 7.85 lakh crores. Now, if you talk about the capital outlay for modernization, that is at 2.19 lakh crores. And the defense capex outlay as a percentage of your total allocation has actually inched up this time around to 29% versus 26% where it stood 3 years ago. Now, this is mainly dedicated to acquiring new weapon systems, aircrafts, and advanced technology. And if you talk about the revenue expenditure from there as well, we're talking about a 5.53 lakh crore kind of a number, which would actually cover daily operations, maintenance, as well as salaries. This would be positive for all PSUs as well. So I'm talking about the OEMs, where you're talking about project integrators and private companies who are into subsystems, component beneficiaries as well. So the entire defense pack probably could see some bit of buying interest that could be coming in, though the moves have been quite negative so far. But clearly the expectation has come in, not that big, something pretty much either on the lines of a couple of, brokerages who expected what could come in, but no, no major announcements that have trickled in this space.
That's right. No big announcement. Defense wasn't the star show of the budget. That's what the big deal is. But here also the budget delivered a record push for the railways with capital expenditure set at 2.93 lakh crore rupees. the highest ever that we have seen, and a continued focus also on capacity expansion as well as safety. And remember the high-speed railway corridors that Finance Minister mentioned. Tell us all about it.
That's right. When you talk about railways as a sector as well, again, you know, the conversations have always been as to what percentage of the outlay has been dedicated to railways. And this time we're talking about an increase of around 5.5% to 2.93 lakh crores. Though, in terms of allocations, this is the highest ever allocation that has come in for the railway segment as a whole. In terms of rolling stock, we're talking about a number little over 52,000 odd crores. New line projects is close to around 36 to 37,000 odd crores. Track renewal, customer amenities and signaling and telecom ranges between 7,500 crores to almost 22,000 odd crores. Now, the major project announcements that have come in over there are 7 new high-speed rail corridors, a new dedicated freight corridor as well that will link West Bengal to Gujarat via Surat, and Kavach 4.0 expansion. In addition, they're talking about new train services and rolling stock, wherein Vande Bharat expansion is something that has been planned. You're talking about 200 new Vande Bharat trains that could be on the anvil. And you're talking about Amrit Bharat as well as Namo Bharat, which is the introduction of 100 non-AC Amrit Bharat trains and 50 Namo Bharat trains, and manufacturing of 17,500 new non-AC general coaches to address overcrowding. So taking all of this into consideration, you have all your rolling stock companies that are in focus, you have all your coach manufacturers that will be in focus as well. So I think the impact will be, we will know the impact only once we speak to the managements as well in terms of what is the kind of order book increase they see. But these are the key announcements that we're tracking when it comes to railways as a sector as well.
All right. Thanks, Hiral, for getting us all those key highlights coming in. Of course, there are many other sectors that are impacted by budget, but let's get a big corporate view on how the budget is seen on the other side. So Mr. R. Doraiswamy, who is the CEO and MD of LIC, now joins us with his take on the budget. Mr. Doraiswamy, always a pleasure to welcome you on NDTV Profit. My first question would be that overall, as the Prime Minister also said, that the budget really lays the ground for the future vision and the growth prospects going up to 2047. How do you see this particular budget from the corporate standpoint and as a vision document?
Good afternoon. I'm of the opinion that this is a very visionary budget looking at the country's aim of becoming one of the top 3 economies in the world, yes, and marching towards Viksit Bharat. This is a step in that direction. I think a lot of steps which have been taken in the recent past are being consolidated, and we are taking it forward further.
That's right. And in fact, when we talk about the key highlights from your standpoint as a corporate house, what are the key aspects that you would rather focus on as something that are the key impact either on your sector or the overall economy?
All the 3 aspects that Madam has focused on. One is on infrastructure development as well as focus on the 7 strategic sectors. 2, strengthening the MSMEs, and 3, working towards increasing the income of the rural population, particularly agriculture, the animal husbandry, fisheries, etc. So it's a completely balanced kind of an outlook where we are looking at both improving the industries in the country, particularly focusing on the important areas of AI, technology, rare earths, data center, and as well as infrastructure building. They're talking about railway corridors, for high-speed railway corridors, waterways being used, and the road corridors as well. So these are going to be in the long-term interest of the country, and I'm sure once the infrastructure builds, the other industries also grow along with that. As an industry, we are looking at the opportunities that is being provided in the form of investment in infrastructure, in the form of higher borrowing, or the availability of securities for insurance industry to invest. I'm looking at a great opportunity in that on the one side. On the other side, we are looking at rural income going up. When rural income goes up, we look at people's buying power to increase and extending insurance coverage to the entire rural population, which is towards the vision of insurance for all by 2047.
Right. So many important aspects, Mr. Doraiswamy, that you have enumerated from the sector point of view also and from the economic point of view also. And great that you also mentioned the rural economy doing well and therefore it percolating into the economy and also to the consumption pattern for your particular sector as well. So that's a very important point that you have mentioned. But coming from the overall economic standpoint, given that globally we are facing the kind of headwinds when it comes to the tariff war, our own manufacturing companies need that support from the government, which the government has been giving with several other FTAs which open new markets. As a key investor in the market, Mr. Doraiswamy, your company, how does it look at it when averting a situation for the exporters and also going inwards in terms of building our own resilience as well as Atmanirbharta when it comes to manufacturing and innovation of critical areas?
It has always been a focus of the country towards Atmanirbharta. So self-reliant India is something which the country is looking forward to. And as a prospective investor, as a very big investor in the country, we are also looking at our companies becoming strong with domestic consumption increasing and looking at quite a good amount of produce being used in the country. That's what is going to give fillip to the entire industry and along with that to investors like us. Also, the focus on capex in infrastructure is going to give us a good amount of opportunity in terms of investing the policyholders' funds also. So we look at this as a very positive step for the industry as a whole.
And does the market momentum and the weakness, Mr. Doraiswamy, also worry you as an investor with a huge portfolio in the market, in the listed space, with the kind of weakness that the market has seen and the disappointment because of the STT hikes in futures and options market? Is that a worry, and do you see that the market weakness could really continue?
I look at this market weakness experience today as a perhaps initial reaction to the broader aspects, as you mentioned, about the STT and other aspects. But looking from LIC's point of view, we are a long-term investor. We are not that much worried about the short-term fluctuations in the market prices. As long as we are looking at a very good positive outlook for industries to perform and the industry companies to perform, we are quite okay with this. We are also looking at such opportunities for additional investments as well. We'll be looking forward to a market which stabilizes over the next few days and then growing from there onwards.
Right. So the biggest takeaway, Mr. Doraiswamy, and please don't hold it against me for picking it up from your answer, that you look at these particular opportunities for investing and entering the market more. So would it be also something that can be expected of LIC to take benefit if the market falls even tomorrow because of this disappointment and this weakness and the pressure really continues?
Madam, we are a long-term investor. We are not looking at short-term blips in the market or whatever it is. And our liabilities are also long-term. So we need to keep investing and staying invested. And that's for the entire life insurance industry as a whole, particularly with a company like LIC, with an organization like LIC, which has huge long-term investments in focus. So we look forward to every opportunity, be it a good rise in the market or such temporary falls. We look at everything on a long-term point of view.
That's right. And also, Mr. Doraiswamy, now many sectors, as you would agree, has been given a fillip through this particular budget. May it be data centers, semiconductors, even defense outlay has been increased. No, not as much as probably the market was expecting, but textiles, tourism, biopharma. Any particular view on which sectors look good and very promising, or any view on any particular sector in terms of potential that has changed after the budget announcement, sir, for you?
I would not like to make a call on sector-specific focus, but we are a well-distributed investor company, so we have all kinds of sectors covered. But certainly we are looking at the fillip that is being given to the services industry, particularly tourism and the biopharma, as well as the medical service providers. Also, we are also looking at the kind of skill development that is being talked about, particularly empowering the rural youth into the AHP or whatever that is being talked about. They are talking about university townships creating more opportunity for the youth to get trained into employability and into entrepreneurship. We are looking at everything on a positive side. We don't want to be very sector specific comments to be made on this.
No, of course. But overall, the government's direction and also at these challenging times globally that we are seeing, there is turmoil on various fronts. Our rupee has also depreciated considerably and there is dollar debasement. Our import bill is to be looked at. Looking at all of that, the fiscal prudence, is that something that corporate India really is betting on from the government and totally thinks is worth really applauding the government for?
The geopolitical tension that we are witnessing, I hope India is in a position to overcome it with kind of the domestic focus and strengthening our self-reliance. I'm sure these things the government will take care, and we are not too much worried about it. But yes, in the short term, yes, they are giving some kind of a difficult signals. As a long-term investor, we look at the long-term prospect of all the sectors of industry doing very well over a long period of time.
All right. So, Mr. Doraiswamy, many key takeaways coming in. Anything else that I have missed out which could have been incorporated in the budget, or any immediate imminent challenges do you foresee at the current moment which needs to be on our watch list as an economy?
No, government actually, the government has already come up with a major rationalization of GST only 4 months back.
Yes.
We were not expecting anything other than that in the near future. In this budget, this has already been announced. Individual life insurance has been made exempt from income from GST. That has already given a fillip and made the insurance products for both individual life and health more affordable. We expect some more fillip coming in the form of increased income in the hands of individuals, particularly in the rural sector. So that will also give us a fillip in terms of expanding insurance cover in the rural sector as well.
All right. So thumbs up coming in for the Union Budget 2026 from LIC. Mr. Doraiswamy, it's always a pleasure to speaking to you right here on NDTV Profit. Thank you so much for your time, sir.
Thank you very much, ma'am. Thank you.
All right, with that, we are completely out of time on this edition of Profit 360. Stay tuned to NDTV Profit for all the news and updates on the Union Budget 2026. Thank you so much.
Budget 2026, the growth agenda.
PGTI comes to you from the heart of South Mumbai at the historic Willingdon Sports Club. The city's classic layout provides the ideal canvas as India's finest golfers share the fairways with the country's top corporate leaders, Mumbai style. Watch at these heights.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। बहुत देखे होंगे, बट दिस इज
Budget 2026, the growth agenda.
Right, we're joined here by the FICCI Power panel. To my left is Naina Lalkidwai. Thank you, ma'am, for joining us. Anand Goenka. Also with us is Puneet Dalmia as well as Sandeep Somani. Thank you so much, everyone, for joining us. Let's get in your first reactions, guys. One line each. What was a hit for you and what didn't feature enough for each of you? Ma'am, let's start with you. We'll have the mic, please.
I think the fact that the hoopla of the budget in terms of fresh announcements has gone away, and that the direction set on the fisc, on making sure that the debt GDP ratios and commitment therein remain. Nice to see the infrastructure spend actually going up. We were worried that it might actually be there or stable or down is a plus. And I think a very balanced budget, one that sets direction in the right spaces. The market has, of course, had high expectations for capital gains tax. So if there's a miss, it's probably been on the capital gains tax for debt, which some of us were hoping would be brought closer to parity with capital gains tax for equity.
Fair enough, yes. Mr. Goenka?
Yeah, I think this is a budget of growth, inclusivity, and continuity. I'd say one thing that really stood out for me was the continued focus on manufacturing, where there was a great balance on strategic areas such as semiconductors, rare earths, electronics manufacturing, as well as sectors where there is a higher labor component such as textiles, apparels, shoes. So that balance of focus of manufacturing stood out for me.
I think the one word which stands out for me is certainty. In an era of unprecedented global chaos and uncertainty, India is a very credible growth story, and it offers certainty, security and growth all at the same time to investors. I also think that this budget is further strengthens the larger vision of Viksit Bharat by 2047 and Atmanirbhar Bharat. So it just strengthens the vision with building blocks and it just creates sabka saath sabka vikas, where there is opportunity for everybody, all families, all communities, all regions, based on strength of those areas. So big vision, but with a lot of micro detailing, and I think that's very thoughtfully done. I think it's we stay the course for the long term, and I think that's very good.
What was a miss for you, sir? Yeah,
I think what I thought was a little bit of a miss for me was that I could not, fully understand that, there are at times that people like big bang announcements that, we will get some short-term, boosters. I did not see any big short-term boosters, and I think, but I don't know whether it's a miss, because I think they have gone for strengthening the long-term vision rather than short-term applause. So in my view, it's a thoughtful stay-the-course plan, and I think the budget should be like that. It's not a day for looking at the stock market, but it's a day to look for the vision and how government is allocating capital and how government is thinking about efficiency of capital. So I think I find that if they stay the course and just strengthen the vision of Viksit Bharat and Atmanirbhar Bharat, it will be very good for India.
Fair enough. Mr. Somani?
So I think the Honorable Finance Minister had laid out a roadmap a few years ago. And I think it's very encouraging to see that every year she is following that roadmap. And that is very important from a commitment and investment point of view, what investors and business people hate the most is sudden U-turns and uncertainty in any process. And I think we've seen with this government that what they say, they do. And I think that is very important. All the right boxes have been ticked. There is investment in infrastructure. She used the word competitiveness for industry. So I think they are doing things which will make Indian industry more competitive, like inland waterways, the ports, the airports. They're all being developed at a rapid pace. High-speed train corridors, focus on certain industries which are job creating. So all these things are good. Focus on capital goods industry, including nuclear power, giving them, customs duty exemption for capex, and most of the products there may be probably imported. So I think they've set on a path and they're going down that path rigorously, and that makes India a predictable economy, which is very important in this very unpredictable and volatile environment externally. So I think, as far as I am concerned, directionally very good points put forward, which will be implemented. We have the confidence of that.
Right. And what didn't feature enough for you?
I don't know whether it's featured in the budget, but there was no announcement in reference to low-cost housing. And I think that is something that the government must encourage, particularly for labor and for, if we want more industrialization, there will be more industrial corridors which were referred to, but no reference of labor housing and low-cost housing in general.
Absolutely. Before the budget, in fact, the chatter was that the affordable housing cap should be lifted from about 45 lakhs currently to at least 50% higher. So that is some sort of a miss. Okay. Doubling down, I'll come to you, Ms. Kidwai, first. There was mention of the city economic regions by the finance minister. Talk to us about what you are making of it, right? Will these be regionally located in terms of what exactly is this? How is this different from the smart city project that the government is running?
I think the big difference here is the clustering of cities. So at one level, it is about the interconnectivity through mobility. And mobility, if you see the way China works, it is amazing because people living, 300 kilometers away from Shanghai or will actually commute into Shanghai for work. So what you do is you spread the benefit into the hinterland. So I think the concept of clustering of cities, which has to come through rail corridors and mobility, but also through the way you treat infrastructure, wastewater, where you position your power plant vis-a-vis a sewage plant, and the utilization of that sewage for power. These are very constructive ways which frankly doesn't require space scientists. The rest of the world is looking at it in some of these ways that we could develop very, very well. And I think as we do this, then job creation, coordinated urban growth also begins to happen. So it's an excellent way to look at urban development. And related to that, I think, is the whole municipal bond package, which has been mentioned. The fact that we have to strengthen our municipalities, encourage them to raise money. The center here, I think I heard, would give 100 crores for every municipality that raises 1,000 crores or more. So it's helping municipalities to stand on their own feet, but also with every fund that you raise it by way of bonds, it brings its own compliance mechanisms, which is also very good for the municipalities. Where's the money going? How is it being spent? So this combination of funding and creation of the next urban infrastructures, particularly in our tier 2, tier 3 cities, is mentioned of peri-urban as well. So you go beyond urban into the peri-urban, I think is a great way to look at it. But we have to see now what that looks like, how it's going to be encouraged, how it will be executed going forward. But good visioning therein. In a sort of related area, there was specific mention of REITs and not in REITs as well, in terms of the public sector enterprises. And what it's really going to do is encourage PSEs, which are very much in government's hand, to push them to move assets out into REITs, which puts more money into their hands. Also, it gives more dividends back to the government, I should think, but enables the public sector to continue to grow in ways which they may otherwise have only really had to depend on the capital markets and maybe crowd out the private sector in the process. So this becomes a whole other avenue for funding, which I think is the way to go. And the more REITs we get from the public sector, it will encourage the private sector to do the same.
Yeah. Mr. Goenka, coming to you next. Defense, again, was expected to be a big sort of pillar in this budget. Not much mentioned here by the finance minister, though there is a 20% uptick in the outlay for defense, which is what you also expected. But talk to us about, maybe this is one reason why the markets are also falling. There's all defense stocks are down as we speak. Talk to us about what you are feeling about that defense space, given the fact that we are navigating all sorts of geopolitical uncertainties.
That's right. I think we expected some more mention about defense. The nature of warfare is changing. The technological advances, drones have become ubiquitous across the board. And our new drone policy that was launched a couple of years ago provides a new opportunity as well. So certainly we did expect more visibility and announcements on some of these spaces. While there's a 20% increase, that's the exact amount that we were looking at. And to that extent, once you go into the fine print, it may already be included. But while the speech time is limited, so I think we'll get some more clarity in that case. But our view is capital outlay, research and technology are areas where we can increase our defense expenditure, which is hopefully visible in the fine print.
Fair enough. Mr. Dalmia, talk to us a bit about the sort of infra outlay that has come in. For you as a leader of Dalmia Bharat, talk to us about the various sectors that you are in, how they get impacted. Talk to us about that.
I think India is making massive investments in both physical and digital infrastructure. And this is not a 1 year thing, but it's a multi-year strategy. And I think it is causing inclusive growth because it's connecting people and it's boosting productivity. So India is moving from just a domestic growth economy to a globally competitive economy over time, where logistics costs will come down, more people will be mobile and connected, and therefore trade can also increase. I think I have seen some phenomenal benefits on the ground. If you see the rural areas, the roads have become very good. There are lots of new airports, and it just like amazes me as to in such a short period of time such good infrastructure has been built. Even the new railway trains, you feel proud that you are in an Indian airport and an Indian railway station. It is cleaner, it is more modern. And, even some of our services there work really well. If you look at the retail spaces in city airports, if you see how quick immigration is compared to, what it is in the West now, India is really setting very good benchmarks for itself. So I think it actually makes a difference to the experience of people, and it improves productivity of people. I've also seen that, we have a large presence in Northeast. It was an ignored area. And now with better infrastructure, rail connectivity, with more airports and also bridges, it is really helping the growth of that region pretty phenomenally. So I think in India, infrastructure used to lag economic growth, and in China it used to lead economic growth. So you have to first build infra, and then growth comes. And I think India has really reversed the thing, and I think they're making massive investments which are paying great dividends, both domestically as well as for competitiveness. So I think even on digital infrastructure, the story is the same. Our UPI, our 5G telecom network, and I think both physical and digital infrastructure is unlocking productivity and creating inclusion.
You mentioned UPI. UPI incentives have actually gone up about 5-fold for this particular year. So that sort of funding by the government and converting UPI into a public good, that is ongoing. Mr. Somani, he spoke about rural infra. Talk to us about urban infra, right? That is something that is a bit that almost all of us have some or the other complain about, the sort of roads there are, the pollution there is. Talk to us about what more needs to be done on that front.
So I think in urban infra, you cannot generalize. You'll have to go according to the major cities. So if you take the example of Mumbai, I think they've done transformational work over the last 3-4 years in terms of the kind of infrastructure on roads, particularly that have been built, and the new airport. And the times from going from point A to point B has less than halved. And Anant will be a judge of that. If you look at a city like Delhi, unfortunately, not enough work has been done in the earlier years. We are very hopeful that now work will start on creating much better infrastructure, particularly on the road network side. So I think it depends. If you talk of Hyderabad, the infrastructure is very good. But in general, yes, since the cities are planned as like full economic zones, and migration from the rural areas to the urban centers is a given. Significant population increase will be seen in the tier 1, tier 2 cities over the next 5, 7, 10 years. So I think the government does need to spend significantly more in the urban areas to create the infrastructure so that we don't have gridlocks all the time. Also, quality of air needs to improve in a city like Delhi, which is at many months of the year they are really, really bad. So I think overall airports are good, train stations are good because they have been already invested in and being continued to be expanded, including the new airport a little away from Greater Noida. So Delhi will get 2 large airports. But I think roadways is something that we need. We are underinvested and we need to continue to deploy more money to make sure that people have ease of living.
Absolutely. Thank you, Mr. Somani. One last question to all of you. There's a lot of emphasis on tourism that was given in this budget. That's a rarity in terms of the amount of resource allocation that is wanting to come up in terms of developing these various hubs. Talk to us about tourism as well as the sort of very broad customs overhaul that has also come in. This was mostly on expected lines. This is something that the finance minister has been hinting at. Talk to us about how this BCD overhaul will help with the sort of export growth that India is demanding. We'll start with you, sir.
So I think tourism is a very important sector, both for job creation and for economic prosperity. Unfortunately, in India, over many decades, tourism has been a neglected sector. This government has tried to put it in the forefront, and I think the scheme to train, let's say, 10,000 people in partnership with IITs to train them to a higher level is most welcome. I think incentives should be given to promote tourism in India in a structured manner. If you look at hotel rooms, I think we have less hotel rooms than an island, like a city even like Dubai. Singapore gets some 30 million tourists a year. We don't even get 1/4 of that. And we have natural beauty across every part of India, whether it's palaces, temples, lakes, mountains. We have everything India, the world can offer, India has. So I think the tourist sector is a very important sector, and the government must redouble its focus on this sector to improve employment. This is one highly employment generating sector. It should be treated like industry. That's my bit. In terms of decriminalization, improving processes, the government is doing a wonderful job. Many redundant laws have been scrapped, and they continue to relook at and re-examine. So it's not that they have gone into any form of complacency. They continue to ask and work with industry, trade, to see what more can be done in terms of, making sure that legal hindrances to growth are reduced, including decriminalization, imposing fines instead of taking you to courts. And these are all moves in the right direction. This was promised by the finance minister and the Honorable Prime Minister some years ago, and they're continuing to work. As we speak, there are 2 very high-powered committees of the Government of India working on this very aspect, where FICCI is very well represented, and we have given from FICCI over 3,000 or 3,500 inputs now on ease of doing business. So we are very involved, and we are thankful to the government that they take the inputs from industry for such critical measures.
Anything that stood out for you in the customs sort of part of the speech for Hindware and Somani?
No, I don't like to comment on individual companies. In any case, it's too premature. I don't know the details because we are just in these interviews right after the budget. So the details is always, the devil is in the details, and that I'm not aware of this point of time.
Fair. Yeah, Mr. Dalmia.
So I think tourism is a very strategic sector. India is a civilizational state with 5,000 years of history, and it has incredible natural landscapes, as Sandeep was saying, sea, deserts, mountains, plains, cities, rural areas, festivals. I mean, India has so much to offer in terms of, we just saw that, we bought the Lord Buddha's relics, and there was an exhibition which was created in Delhi, and, it's thronged with people. So I think this is India's strategic asset. It creates pride and respect for who we are, and it also helps us export our soft power. And India has been like a state which is, despite GDP growth and phenomenal outcomes in the last 75 years, it has, it is a very adaptive culture. It's a very soft culture. It's a very, I would say, a culture which people like to associate with. It's not a threatening culture. So India is something very special, and I think tourism will help people, from different parts of the world experience India. Apart from that, it creates employment, and I think they've done it very thoughtfully. There are hiking trails in Uttarakhand, Himachal, and J&K. There are turtle nesting trails. There are birding. So I think they've really thought, and apart from this, spiritual and cultural assets also are being unlocked. So I think that's excellent. On the export-import side, I think it's a part of simplification of doing business, which will help MSMEs and which will help others. And it is also, again, strategically positioned to take advantage of the EU trade deal, which will play out in the next 1 year. So I would say that government is being very strategic. At the same time, they listen to people and try to continue ease of doing business and make sure that the compliance burden just keeps going down.
I'd just like to just quickly say our food and our culture are global emissaries for us. The Indian food is now so well accepted across every part of the world that it's a global ambassador for us.
And I'll just add one more thing. DNA mein Atithi Devo Bhava hai. So I think the hospitality experience here is just phenomenal. I mean, you go out and you can't experience the same Indian hospitality. So it's a strategic sector which has a lot of benefits, soft as well as economic benefits.
Yeah, on tourism, I'd just say that one is it's a great source of job creation and a low-cost form of job creation. You look at a factory, there's capital investment that is needed, permissions needed. Here, your capital exists in the form of our history. So to that extent, there's some amount of training, maybe a few hotels, but you're set to leverage those years and years of history in the country. On customs duty, I think the rest of the panel has shared that it is focused on simplification, on moving from prosecution or penalties to fees, which makes life easier, and concessions on areas which are again important to us, leathers, textiles, and job creation areas. That's right.
So much has been said about tourism. I just also highlight that medical tourism was underlined and very critical one for the country. Has been there before in budgets, but I think the time now, given that we have the airports, the road connectivity, etc., so that you aren't actually dead even before you get to the hospital or center, is assured. And I think the time is right to really push for medical tourism. And related to that, there was quite a big push on job creation in the healthcare areas. So, we've had wonderful films like Marigold Hotel, where you actually get old people from Britain coming to live in India because of the quality of care that can be provided as a geriatric. So these are the sort of areas which India has a natural space to occupy, job creation, but equally the skilling that we provide in that whole healthcare universe is going to be quite critical. I would also add in the tourism space, the Northeast got mentioned in terms of the Buddhist trails. Wonderful to see again that it is there, and as someone who's really very closely associated with the Northeast, I'm delighted to see that the tourism potential of that area is so huge, and there's just so much to be done there. And exactly as Puneet mentioned, having now that road infrastructure in place can be help develop it. And it's a great integrator that if we can get the people of the Northeast begin to feel the benefit of being part of a big economic country like India, because we push the benefit in to the Northeast, equally that we're bringing the talent of the Northeast into the rest of the country as we're seeing their presence in the retail sectors, health givers, etc. It is actually a fabulous way to tackle the whole tourism space. I would just say, even while we look at that, if we can focus on the whole waste to energy theme, which the Prime Minister has embraced so powerfully. And I say this in the context of plastic waste management, where, we can push tourism for all the beauty of India and culture, but we've also got to clean up our act. And it is a resource. If we can manage this properly, really secure our waste to energy sort of theme, clean up the plastic, clean up our poor sewage practices, and make sure that we also deliver a clean and pleasurable India to our tourists, domestic or global tourists for that matter.
Absolutely. So a lot of growth inside, but a lot of work to be done as well. And this budget sort of gears up to that. Thank you so much, everyone, for your views. Viewers, this was the FICCI Power panel here after the budget. Stay tuned for more budget coverage.
Budget 2026, the growth agenda.
Your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
In her 9th budget, Finance Minister Nirmala Sitharaman announced a significant push to public investment, raising capital expenditure to 12.2 lakh crore rupees, while maintaining a firm focus on fiscal prudence, pegs the fiscal deficit for FY27 at 4.3% of the GDP. Key sectors set to benefit from higher outlays and targeted tax concessions include biopharma, semiconductors, nuclear energy, data centers, and tourism. Government increases securities transaction tax on futures and options, spoiling the mood of D Street, pushing Nifty to its biggest budget day fall since 2020 budget. A big boost for rare earths. The government will set up dedicated corridors across Tamil Nadu, Kerala, Odisha and Andhra Pradesh to scale up domestic mining, processing, research and also permanent magnet manufacturing. A strong push for MSMEs. The government announces 10,000 crore rupees incentive package topped up by an additional 2,000 crore rupee under the Self-Reliant India Fund. Duty cuts and an aggressive export push aim to shield India from Trump's tariff heat. Finance Minister Nirmala Sitharaman says focus remains on maintaining the growth momentum with structural reforms to boost the productivity and also drive employment.
Budget 2026, the growth agenda.
I present the budget for the year 2026-2027. This is the first budget prepared in Kartavya Bhavan. Public capital expenditure to increase it to 12.2 lakh crores. The STT on futures to 0.05% from the present 0.02%. The fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. We will develop 7 high-speed rail corridors, basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035. With this, I commend the budget to this august House. Jai Hind.
Hello and welcome to the exclusive budget coverage on NDTV Profit. I'm Himakshi Bahugna, and along the next 1 hour, we'll be bringing you all the latest updates and also what really means for you in the budget 2026. Viewers, action over ambivalence, reforms over rhetoric, and people over populism. That's the tone Finance Minister Nirmala Sitharaman set at the beginning of a budget speech for FY27. First up, the announcement that shocked the markets. The government has proposed to hike the STT, or Securities Transaction Tax on futures and options. While the STT on futures was increased by 150%, options will be taxed 50% higher than the current rate. Second, in a fresh boost for the small enterprises, the government has proposed to introduce a growth fund worth 10,000 crore rupees. Now, this scheme is aimed at reviving 200 legacy industry clusters. Also, a 2,000 crore top-up under the Self-Reliant India Fund is also proposed to support micro enterprises. Now, two of the key sectors that have also received a significant outlay were the semiconductor mission and also the rare earths. So the Finance Minister has proposed to establish dedicated rare earth corridors in Odisha, Andhra Pradesh, Tamil Nadu and also Kerala to reduce India's dependence on exports. Further, it will also hike the outlay for semiconductor mission to 40,000 crore rupees. And finally, in an attempt to boost tourism, the Finance Minister proposed to create tourism destinations in 5 Purvodaya or eastern states. Now, 6 Buddhist circuits will be formed in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram and Tripura. let's bring you some highlights of the Finance Minister's budget speech.
I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I propose to set up a high-powered Education to Employment and Enterprises Standing Committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP.
And viewers, commenting on the Union budget, Prime Minister Modi has underscored the impetus it provides to sunrise sectors, now from building rare earth corridors to a renewed push to secure the biopharmaceutical industry. The Prime Minister has said that this budget elevates the speed of Viksit Bharat, bringing India one step closer to its developed vision. Listen in to a brief snippet from his address.
इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमईज तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है।
And let's go across to my colleague Varsha now for a detailed report on the biopharma scheme.
So yes, overall healthcare is in focus. Let me start with the Biocon first. The shares of Biocon are in focus. Now this is on the back of Finance Minister. She's announced an allocation of 10,000 crore rupees under Biopharma Shakti program for the next 5 years, and biologics are the key to longevity, and the plan is to develop India as a biopharma manufacturing hub. And biologics is, and biosimilars I would say, is the next leg of growth when it comes to Indian pharma companies. Now how Biocon will benefit? One is Biocon Biologics is India's largest biosimilar developer with a global portfolio, and this will enhance Biocon's competitiveness when it compared to the global peers. Now also Finance Minister also said 5 medical tourism hubs will be established in partnership with the private sector, and so the hospital sector, if you see, the hospital stocks are also buzzing, say Apollo Hospitals, Max Healthcare, and also some of the diagnostic firms like Metropolis is also buzzing on the back of this news.
So a 10,000 crore of outlay for Biopharma Shakti scheme. Let's now look at the semiconductor sector. Puneet, my colleague, is joining us with highlights of the announcements made for the sector. Puneet, over to you.
Well, the EMS sector was in focus on the back of the budget and the key moves that came in. There were 4 key moves, but the key one was on the increase in the outlay for the e-scheme. Now, that has increased to almost 40,000 crores from 22,900 crores, and key beneficiaries include the likes of Sitharaman, Amber Enterprises, Keynes Tech, as well as Dixon Tech, which have already gotten approvals in phase 1 and phase 2. But now with the increased outlay, could include some new projects as well. Apart from that, there's also been an increase in the outlay for the white goods PLI. Now, Dixon Tech specifically is beneficiary of this under the LED lighting scheme, so which comes under the white goods PLI. So you could see some benefit of that going forward. We'll have to wait around if there's any more further projects announced by Dixon Tech for their PLI schemes under the white goods. But on the other hand, the PLI for the mobile segment has actually reduced substantially to almost 1,800 crores versus 9,000 crores in the same time last year. So you are seeing that negative impact on the mobile PLI. Also to watch out for that March 2026 will be the last time where you will be seeing the PLI being applicable for the mobile segment. So post that there will be an expiry and no extension has been announced. Finally, in terms of the India semiconductor missions, the reason why we're mentioning this in the EMS space is because the likes of Keynes Tech and Dixon have already announced their interest in the semiconductor mission space. Semiconductors are already investment which Keynes Tech has already done of almost 4,000 odd crores. So you will start to see revenue accretion in FY27. Dixon was waiting for ISM 2.0. So you could see some key commentary coming in from the company in Q4. But largely, these are some of the key measures for the EMS sector in budget 2026.
Absolutely, Puneet. Thank you so much for that. In fact, outlay for the EMS has been hiked to 40,000 crores. Viewers, in fact, budget 2026 has also, had made some key announcement for the textile industry. Now, this includes some sort of key proposals to introduce the national, fiber scheme for self-sufficiency in this space, and also aim to foster Samarth 2.0 to promote skilling in the textile sector. Let's go across to my colleague Mahima for all the details on this.
Right, so there's a good relief that overall the textile space has got, and this was much needed because we've seen the volatility in the textile space because of the pending India-US trade deal. Now, what is coming in the budget? To be specific, there is going to be an integrated program in 5 subparts. First one being a national fiber scheme for self-reliance in natural fibers, silk, wool, jute, etc. is going to take place. Textile expansion in employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation and common testing certificates. The third part is that there is going to be a national handloom handicraft program that will take place. Fourth one is that Tex Eco initiative to promote global competitive and sustainable textiles and apparels. Then they've also launched something called Samarth 2.0, which is going to have overall upgradation of textile skills. They've also set up they also plan to, of course, set up mega textile parks in challenge mode, and they've launched something called Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom as well as handicraft. So this is the overall push that this budget has given to the textile space.
Thank you so much, Mahima, for that. Let's get back to Puneet, to Jasmeet, for his take on the IT and data centers. Jasmeet, what are you picking up?
Well, big boost for data centers in budget 2026. Well, as per government, they propose a tax holiday up until 2047 for all the foreign companies that are using India data centers to provide the global services. Well, this further integrates more investment in India when it comes to data centers and further clears a long-term view for data centers as well. Something like a TCS, which is already planning for data center, will be in focus in this news. Further, today we did see data center focused stock like Anantraj and E2E spiking in trade, with Anantraj scoring 11% and E2E scoring a 6%. It's a wait and watch of how overall data center trend turns around in India going forward and how it impacts the Indian IT service going ahead.
Viewers, let's get back, Puneet, to also get all the details on the auto sector. He tracks the space closely, has also gotten us all the details on the announcements made on rare earth minerals. Puneet, over to you.
Well, while there haven't been direct any incentives announced in the budget of 2026 for the auto space, the rare earth magnets have gotten a boost. Now, under this, they are being expanded with REM corridors for mineral-rich states like Odisha, Kerala, Andhra Pradesh as well as Tamil Nadu, and these could lay the foundation for rare earth as a space to explore for the auto sector going forward. Apart from that, there's also been a provision of 4,000 electric buses, and this will be a key benefit for Ashok Leyland, Electra Green Tech amongst others. This is specifically for North as well as Northeast, so you could see that benefit for them as well, but largely very limited moves in terms of auto, but rare earth gets mentioned by Nirmala Sitharaman in this particular budget.
Thank you so much, Puneet. In fact, big announcements have come in for the tourism sectors as well. 15 archaeological sites will be converted into vibrant destinations. Mahima, I'm bringing you back. Please share all the details.
So tourism is the other space which has been in focus in this budget 2026. A lot of initiatives taken to boost tourism as a whole. So 2026 you could also see, boost in terms of where tourism stocks go. Firstly, in terms of the heritage development, they've identified 15 archaeological sites, including something like Sarnath or Hastinapur, and digital knowledge grid for all significant places will take place. There's also an ecosystem that will be developed for researchers as well as historians and tech partners. Something like Khelo India has also been launched, new mission to launch grassroots sports. There's hospitality push which is coming in from the establishment of National Institute of Hospitality, and upskill of 10,000 guides, trekking as well as total and bird watching trails will take place going forward. Lastly, one major update coming in with regards to TCS, where overall TCS rate has been reduced to 2% for overseas tour package. So this is the overall view of what changes have been made in the tourism space.
And let's go across to our newsroom for deeper insights on Budget 2026. Joining us is Alex Matthew, our senior editor. The budget introduces several changes for individuals spanning taxation, overseas spending, and also investment. Alex, connect the dots, for us, and also walk us through what these changes really mean.
The key takeaways for individuals from Budget 2026. First of all, no big bang announcements. Of course, last year you saw the major overhaul of the income tax regime, and so therefore there wasn't expected to be a big bang announcement, but there are still a few changes that you should watch out for. First, if you're trading in derivatives, then the securities transaction tax across the board has actually gone up, and that's something that you should bear in mind. Second, quite an important update if you are looking to purchase sovereign gold bonds from the secondary market. From the 1st of April onwards, you will no longer get the benefit of the waiver of capital gains tax, long-term capital gains tax, if you buy SGBs in the secondary market. And there are no fresh issuances of SGBs taking place, so that's a negative for you. And of course, with the way that gold has risen, it doesn't make any sense for you to sell those bonds in the secondary market anyway. The third has to do with the treatment of share buybacks. They will now be treated as capital gains as opposed to the earlier treatment of similar to dividends, where it would be taxed at the slab rate. There are a couple of changes related to the tax collected at source. One, if you are buying foreign tours and travels, then that tax collected at source has been reduced to 2% from 5% and 20% earlier, and the tax collected at source for remittances for the purposes of education and medical purposes has been reduced to 2% from 5% earlier. There is also a complete exemption on customs duty on 17 drugs that are used to treat cancer, and this is looked at a positive for all individuals. And finally, there is a window that has been provided, 6-month window for you to disclose any foreign assets and income that you might not have previously disclosed. So this is a window for you to meet with regulatory guidelines. And there are also a few changes related to the filing of your income tax returns, revised filings, etc. There is now a larger window for you to do that, and you can also file a revised filing after reassessment is done. But make sure that you check with your chartered accountant to ensure that you're following the right rules. Those are the broad takeaways from the perspective of the individual.
And viewers, talking about the defense and railway sector, you know, there has been a capex push for this. So my colleague Hiral, who tracks the sector closely, is getting us more details. Hiral, over to you.
Defense as a sector has been beaten down in 2025. In fact, the kind of gyrations that we've seen at the start of 2026, the expectation was there could be some announcement that could be coming in. And now you're talking about an outlay or allocation which has gone up by almost 15% at 7.85 lakh crores. Now, if you talk about the capital outlay for modernization, that is at 2.19 lakh crores. And the defense capex outlay as a percentage of your total allocation has actually inched up this time around to 29% versus 26% where it stood 3 years ago. Now, this is mainly dedicated to acquiring new weapon systems, aircrafts, and advanced technology. And if you talk about the revenue expenditure from there as well, we're talking about a 5.53 lakh crore kind of a number, which would actually cover daily operations, maintenance, as well as salaries. This would be positive for all PSUs as well. So I'm talking about the OEMs, where you're talking about project integrators and private companies who are into subsystems, component beneficiaries as well. So the entire defense pack probably could see some bit of buying interest that could be coming in, though the moves have been quite negative so far. But clearly the expectation has come in, not that big, something pretty much either on the lines of a couple of brokerages who expected what could come in, but no major announcements that have trickled in this space.
Thank you so much, Hiral. Just stay with us. This budget delivered a record push for railways with capital expenditure, set at 2.93 lakh crores. So this is the highest ever, and also a continued focus on capacity expansion and safety. So tell us more about it.
That's right. When you talk about railways as a sector as well, again, the conversations have always been as to what percentage of the outlay has been dedicated to railways. And this time we're talking about an increase of around 5.5% to 2.93 lakh crores. Though, in terms of allocations, this is the highest ever allocation that has come in for the railway segment as a whole. In terms of rolling stock, we're talking about a number a little over 52,000 odd crores. New line projects is close to around 36 to 37,000 odd crores. Track renewal, customer amenities and signaling and telecom ranges between 7,500 crores to almost 22,000 odd crores. Now, the major project announcements that have come in over there are 7 new high-speed rail corridors, a new dedicated freight corridor as well that will link West Bengal to Gujarat via Surat, and Kavach 4.0 expansion. In addition, they're talking about new train services and rolling stock, wherein Vande Bharat expansion is something that has been planned. You're talking about 200 new Vande Bharat trains that could be on the anvil. And you're talking about Amrit Bharat as well as Namo Bharat, which is the introduction of 100 non-AC Amrit Bharat trains and 50 Namo Bharat trains, and manufacturing of 17,500 new non-AC general coaches to address overcrowding. So taking all of this into consideration, you have all your rolling stock companies that are in focus. You have all your coach manufacturers that will be in focus as well. So I think the impact will be, we will know the impact only once we speak to the managements as well in terms of what is the kind of order book increase they see. But these are the key announcements that we're tracking when it comes to railways as a sector as well.
Absolutely. Thank you so much, Hiral, for taking us through those details there. In fact, government has also announced to increase securities transaction tax on futures and options. Now, it has pushed the Nifty to its biggest budget day fall since 2020. My colleague Somit is sharing the details of the impact. Somit, over to you.
Well, few key announcements that have come in this budget. Firstly, it's on the STT increase done by the Government of India. They have increased STT on derivatives. For futures, it has been increased to 0.05% from 0.02%, and for options premium, it has been increased to 0.15% from 0.1 or 0.125% that was there earlier. So this will be majorly negative coming in for all the capital market companies like Nuvama Wealth, Angel One, and majorly for BSE, because BSE derived nearly 60% of its revenue from derivatives in the first half of this financial year. When it comes to banks and NBFCs, the government has set the FY27 gross market borrowing number at close to 17.2 lakh crore rupees, and this is something that spooked banks and NBFCs, and majorly PSU banks were down in trade today because of this reason. When it comes to capital goods, infra and cement companies, the capex target is increased by around 10% for FY27 to close to 12.2 lakh crore rupees, and this is pretty much in line with what the street was anticipating, so no positive or negative surprise coming in on this front. For defense, yes, a positive surprise, 22% increase in the defense allocation that has happened for FY27. The number has increased from 1.8 lakh crore in FY26 to 2.2 lakh crore rupees. Now again, this was also expected by the street. The growth was expected to be anywhere between 20 to 25%, but again the 22% number that has come in is quite positive for defense companies. For in the EMS name, for Dixon, it's a negative given the fact that the PLI for mobile and IT hardware, the amount has come down to 1,527 crore rupees. For FY26, this amount stood at close to 9,000 crore. So a sharp downtick that is coming for the PLI number for mobile and IT hardware. For oil marketing companies, the street was anticipating that there could be an increase in excise duty by around 2 rupees per litre, but nothing has been mentioned about the same in the budget document and in the final details also. If you go through, if you look at the excise duty amount, yes, it is showing a big increase, but that is largely because of the incremental revenue that the government is expecting to come in from the increase in taxes for cigarette. So no implementation of incremental excise duty on petrol and diesel. That is positive for oil marketing companies. For auto ancillaries like Motherson, Uno Minda, Bosch and Bharat Forge, the PLI scheme for automobile and auto ancillary has seen a big jump coming in at close to 5,940. Last year, this amount stood at close to 2,000 crore rupees, so nearly double the amount that has been allocated for FY27, which is quite positive. For Paytm, the UPI scheme-related incentive is also up sharply. It has been revised to close to 2,196 crore for FY27 as against 437 crore in last year. So that is also coming in as positive for Paytm. And lastly, when it comes to HUDCO, the actual allocation for IEBR has been revised on the higher side, and for FY27 also, if you look at, the amount is nearly 17% higher on a YY basis. Now this is quite positive for HUDCO given the fact that HUDCO relies on this internal and extra budgetary resources for capital deployment and for its operations. So that is also coming in as positive for HUDCO.
Thank you so much, Somit, for that. And viewers, with that, we are slipping into a very short break, but stay with us as our exclusive budget coverage continues.
Budget 2026, the growth agenda.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Budget 2026, the growth agenda.
Welcome back, viewers. You're watching exclusive budget coverage on NDTV Profit with me, Himakshi Bahugna. So, viewers, let's continue. We spoke to the MD and CEO of the Bombay Stock Exchange, Sitharaman Ramamurthy, for his reaction to the budget, and also he believes that sectors such as manufacturing, services, infrastructure and the SMEs stood out today. Let's listen in to his remarks.
Sir, tell us, how do you see the budget this year?
Thanks for having me in your show. At the outset, let me congratulate the Honorable Minister for Finance and Corporate Affairs for presenting one another budget to the House. When I look at the budget, I feel it's one more important step towards Viksit Bharat, where a good amount of importance is given to capital formation and fiscal discipline. All the major pillars which will contribute in this area, the Honorable Finance Minister has touched. If you take manufacturing in a big way, particularly things like rare earth, pharma, Madam has covered a lot. And if you take services sector, banking reforms, she is talking about for Viksit Bharat, and infrastructure, city development, Tier 2 and Tier 3, and last but not the least, SMEs. Multiple efforts have gone in carefully drafting something for everybody which will contribute to Viksit Bharat. As far as markets are concerned, lot of wide-ranging reforms. Investment limits for PROI, buyback, corporate bonds, municipal bonds. I think overall, the entire effort, as I said, has been towards Viksit Bharat.
So delving a bit on, the STT increase in the F&O space, how do you see this affect the market and the F&O space, and what is the intent of the government behind this?
Two, three things. I would not be qualified to say what is the intent of the government. What I understand is what I'll be able to put across. In my opinion, the STT increase is to orient people towards long-term equity investment. Today, the STT on intraday cash will be lower than that of F&O. So it therefore orients people to look into the equities market and plan for long-term equity investment. Arbitrage funds which try to trade futures versus underlying cash may become costlier because of the increased STT. So the attraction towards, say, bank deposits may increase. That is another outcome that can happen. So that's the way I am looking at it across.
A bit on the PROI, as you said, that the ease of investment is being provided. So do you think that will, help more investment come in the equity markets?
See, as India, we would expect anybody who is from Indian origin would like to contribute for the development of this country. So the increase in limit of PROI can help in more foreign funds from these people coming into Indian markets for investment. That is good for deepening and broadening of the markets, overall liquidity, and therefore secondary market activity will also help in primary market activity growth. Therefore, again, Viksit Bharat. That's why I feel everything is leading to that part.
So we can finally see that, more FII inflows could also be, go ahead with this?
Possible.
Lastly, how do you see the NSE now finally being listed, and also how do you rate the budget?
The budget, as always, has been great, and NSE, I congratulate them. I congratulate SEBI by, as promised by them, they issued the NOC within the stipulated timeline, and I wish all good luck for NSE in their listing process.
So viewers, that was BSE MD and CEO speaking to NDTV Profit on the budget, where he has, focused on the strong steps, that this budget is taking towards the Viksit Bharat. He's also emphasized on the capital formation and also the fiscal discipline that is required. He said that multiple growth pillars have addressed, in a balanced manner. And the sectors, in fact, according to him, that have stood out are manufacturing, banking, and infra. Now, giving the top key takeaway from the budget, Anisha, Group CEO and MD of Mahindra Group, has told NDTV Profit that Sabka Saath, Sabka Vikas is paramount as a formula to India's growth story. Let's listen into his commentary as well.
I think everyone needs to be part of the economic growth story. We're going to see very significant economic growth. India will add $5 trillion to the GDP in this decade. And from that perspective, it is important that everyone's part of that story. And I think that has been a highlight of this budget and continued actions that have been taken by the government over the past few years.
So that was Mahindra Group CEO and MD Anisha talking about, India is all set to add $5 trillion, to the GDP this decade. In fact, to mobilize more revenues and also bring parity in the derivatives taxation, Finance Minister has proposed higher STT rates, viewers, on these concerns and also the possible impact on the derivatives market. We've spoken to Nilesh Shah, MD of Kotak Mahindra AMC. Here's what he had to say.
So undoubtedly speculators will be unhappy. All the capital market exposure companies also will be unhappy. And even people who are not speculator and not linked with capital market company does carry a tinge of sadness that STT was levied in lieu of capital gains tax. Now STT has kept on increasing thereafter. Even capital gains have kept on increasing thereafter. But at the end of the day, look at from government point of view. STT is like a sin tax. 9 out of 10 people who trade in F&O loses money. The people who made money are HFTs. Now, if you are not bothered about your own wealth, shouldn't you be contributing to the government's coffer, government's kitty? So clearly this is a very tough decision for finance minister. I just hope and pray at some point of time, capital gains tax gets reduced for investors and let speculators pay through STT.
Viewers, that was Nilesh, MD of Kotak Mahindra AMC, where he has said that speculators are not so happy with the STT hike, and markets have reacted sharply to the news. They've fallen down since 2020 budget. That's the steepest fall they've the markets have witnessed on this update. And also Nilesh has highlighted that the STT hike is a tough decision for the finance ministry. And moving ahead, Suchitra K. Ella, co-founder and also MD Bharat Biotech International, spoke to us especially on the announcements related to the pharmaceutical industry. At the CII event, she has explained the positive result of the regulatory changes in the space, and also she's described the budget as a comprehensive, positive, and also growth-oriented. Let's listen into that commentary as well.
Most importantly, what she also covered was about how the regulatory framework that covers us as an industry will also go through a lot of changes and revamping of some of the older practices and guidelines that we have followed in the country, and so that we become more competent in terms of timelines and quality standards, and then global and servicing the global markets at large.
Viewers, this budget proposed a 20-year tax holiday for foreign companies establishing data centers and also cloud computing infrastructure in India. Speaking on the same, B. Thiagarajan, Managing Director at Blue Star, has said that this would increase the FDI flow into the country, which he views as a big positive for our long-term growth. Let's listen in to his comments from the CII event.
While FIIs are friendly for the stock market, obviously FII inflows is something which benefits. But the sustainable long-term one is the FDIs, right? That is going to stay here and provide a sustainable advantage. So the tax holidays that are being given for FDIs is great. And India being a market for many of them, for them to come here and invest, our dependence on FDI should go up compared with the FII, which I personally think is opportunistic investment comes and flows back. In the process, today we are suffering from the exchange rate, which is very unreasonable.
In fact, viewers, my colleague Ronit spoke to Blue Star Chairman and MD Veer Advani. He has shared insights on Budget 2026 and also its impact on the manufacturing sector.
We have here Veer Advani, MD and CEO of Blue Star Limited here. Sir, thanks for having you here. So this budget, there were many concerns related to private capex and the expenditure which needs to be done by the government. So what is your view about this budget and the private capex? Do you think that it will improve in the future course of journey?
Sure. So I think the budget talked about manufacturing, investments in manufacturing. So 7 sectors called out, both legacy sectors as well as new generation manufacturing. So good balance. So we had chemicals, capital goods, textiles from the legacy side. We have semiconductors, EMS, rare earths from the new gen side. So I think with the government focus on these 7 manufacturing sectors, I think private capex will follow. So that's a big positive. I think the 10,000 crore equity fund for MSMEs is going to be a big push for private capex. Obviously, a lot of private capex should be done by MSMEs. They have not been investing because of lack of capital. So I think the 10,000 crore fund will really accelerate their investments. It will bring them into the stock market also. I think MSME participation in equity markets is extremely important. So I think these two are very important. The other is focus on services. I heard investments in tourism, in healthcare and in education. All 3 sectors have a fair amount of private capex that has been on the sidelines. I think with the renewed focus on making India to get 10% of global share of services, I'm sure the private sector will follow in with investment.
Sir, my other question is like, this is not related to budget, but we saw that last year, like during summer season, there were like, the weather was very uncertain. Like you saw some unseasonal rains, because of which the especially like the companies who manufactured air conditioners and all, they got affected.
Yeah.
So this year, like what is the strategy that you are trying to implement so that, you know, if there is any uncertainty, you can like solve that type of problem?
So unfortunately, we are a summer dependent industry, so there's no strategy you can come up with that will solve a weather problem. So we are dependent on the weather. So it's been a washed out summer. It was a washed out October, which is usually a second summer. So net a bad year for our industry. You may know that the industry is down 13% over the previous year. Blue Star is down 9% over the previous year. So we're slightly better than industry, but still degrowth. For the full year, the industry will degrow about 10%. Blue Star will degrow about 5%. So not a good year. But having said that, I think that the good news is in the last 20 years, there has never been two washed out summers back to back. So we have to have hope and expectation that this will not be the first time. So as long as it's a normal summer, I think we're all expecting a very strong bounce back.
Okay, after that, interesting commentary. Let's get back. Finance Minister's remarks